Okay. So kind of the very first thing with QuickBooks is I'm going to talk about, I always talk about kind of the versions of QuickBooks Online. There are, let's see, there's 1, 2, 3, 4 different versions of QuickBooks. There's actually 5, and I usually don't ever talk about the most basic one because it's not, I don't find it very helpful to a lot of organizations. And so I like to talk about the QuickBooks versions for a couple of reasons. One, it just kind of makes sure that, kind of reassures you that you are on the correct version for your organization. And then 2, QuickBooks has a feature where you can upgrade or you can downgrade your version. So if you happen to have gotten on a higher version, you may be paying a little bit more than you need to, you can downgrade. So I just kind of like to talk through the different versions, what to look for, and to make sure you are on that correct version. Or if you're on desktop, you can look at, hopefully it'll give you a guide to what might be the right version. So when I'm working with a client, one of the first questions I ask them is how many users? Morning.
Good morning. Fine, the weather's not really great. Sorry. I know, because I was a little late. I have an older dog and she did not want to go out this morning.
I don't blame you.
No, thank you. Just kidding over here.
We are just getting started, so you guys are perfect. So we're starting off talking about QuickBooks versions, QuickBooks Online versions, just to kind of make sure you're on the right version. Again, as I mentioned before, QuickBooks, you can either upgrade or downgrade your version. So I like to talk about it so everyone feels like they're on the correct version. But one of the first questions I always ask my clients is how many users are you going to have accessing QuickBooks Online? That is probably one of the biggest things that determines what version you need to be on. You can be on, have anywhere from 1 user all the way up to 25 users. So that's always kind of the first question that I ask. The other thing is, what features do you want to use in QuickBooks Online? That's another big question. So each version basically adds on additional features. So if you want to use classes and locations, we know that you're automatically in the plus version. If you use inventory, again, it's the plus version. So there's different features that basically turn on with each version that you have. And the other thing that I like to talk about is, once you know what QuickBooks version you need, it's where are you going to purchase it from? So there are a lot of different places that you can purchase QuickBooks. Online, you can purchase it directly from Intuit. They typically always offer some sort of a discount. It's for about 3 months. We have a company we partner with that you can order from as well, just on our website. But if you're a nonprofit organization, especially a 501c3, TechSoup is where I would recommend going to purchase your QuickBooks Online. You can get, last time I knew, it was like $50 a year or something like that. So it's a crazy good deal. So if you just purchased it or need to purchase it, that's where I would go to purchase it. I know 501c3s qualify, but a 501c6 I know did not. I had a company that we could not get qualified through TechSoup because of that. So, and then kind of like I mentioned, if you are already purchased QuickBooks Online and maybe as we go through this, you realize that you purchased the wrong version, you can always downgrade your QuickBooks file to a different version, or you realize you need to upgrade, you can upgrade as well at any time. So kind of just a really quick overview of the versions. The first version, kind of the basic version, is a Simple Start version. And when we talk about users, Simple Start only has the capability of having 1 user. I should say 1 billable user. You can have up to 2 accountant users that don't count as billable users. So if you're the only one that's going to access it, and then your accountant needs to access it, you could do Simple Start. That would be a good fit. The biggest things that Simple Start does not have that I have found as kind of downfalls: you cannot use the accounts payable module in Simple Start. You cannot do recurring transactions in Simple Start. And then if you can do comparative reports, however, you can't have a dollar change column or a percentage change column, which is kind of what we use a lot on the accounting side. But that's one downfall that we found in that version. You used to not be able to get the general ledger report, but actually I looked the other day and you can actually get the general ledger report now in the Simple Start. So now when we move up to the next version, which is Essentials, the biggest things with this one, you can have up to 3 billable users. So if you have 3 people that need to access it, that would be a good version for you. It does have accounts payable and it does have recurring transactions. So kind of what Simple Start doesn't have, a few of those features Essentials has. And really, and one of the other things is the number of reports. So like Simple Start, 20 reports, Essentials, 40 reports. A lot of the reasons that you don't have some of the reports is because of the options that you don't have available in that version. So like for example, Simple Start wouldn't have the accounts payable aging summary, which is why it's lacking some of those reports. So the Plus version is the next version. And this one has up to 5 billable users that you can have with that version. It also has the class and the location tracking, which I mentioned, which we'll talk about a little bit later. And it is also the first version that has inventory. The inventory probably doesn't pertain to a lot of you, but that's also the first version that has inventory. The advanced version, a lot of people think this is comparable to QuickBooks Enterprise. It is not. There is really not an online version that is comparable to kind of the advanced features that you get with Enterprise. But with the advanced version.
Enterprise is desktop.
Yeah, sorry, Enterprise is
Yeah.
desktop, yes. Advanced has up to 25 users. And probably the 2 biggest things that you get with this one is advanced reporting. You get a lot more reports. Your PowerPoint under each of these versions, what the cost is. This would be full retail price. Like I said, there's plenty of places that you can get discounts. So I wouldn't recommend paying the full price, looking to see or reaching out to us and we can find a place for you. But when I talk about those versions and you talk about upgrading or downgrading, if we go into your QuickBooks file, depending on what type of user you are, you should have a billing and subscription option here. And I'm guessing this is one thing that I can't do in the sample company, but there should be a billing and subscription option here. And that will tell you what version you are on. And then it will also give you the option that says upgrade your plan or downgrade your plan. So if you look through this, realize, hey, I'm paying more than I need to, you can go to that billing and subscription and adjust your subscription as you need to. So now that you are on the right version of QuickBooks, the biggest thing in making sure that you get the information that you need from your QuickBooks file is to make sure it's set up correctly. So even if you have, that could be you're just starting out with QuickBooks, you want to get things set up, you want to make sure you're set up correctly. It could also mean that if you're on QuickBooks, you're not getting the information you need, stepping back and just looking at how you have things set up and adjusting it and making sure you're getting what you need out of your QuickBooks file. So there's kind of 3 areas to kind of think about when you're setting up your QuickBooks file. One is the account and settings, which we were kind of already here, which kind of turns on and off features in your QuickBooks file. And then it also has your basic kind of legal information on how your company is set up. The next thing is going to be your chart of accounts. So if we look at your chart of accounts, this is kind of like your hub of your QuickBooks file. So how you set this up, you're going to record transactions to your chart of accounts. And then this is going to flow into the different reports that you create, which is going to give you the information that you need. So your chart of accounts is really an integral part into your setup into QuickBooks. And then the other area is how else can you let QuickBooks do a lot of the work for you? So some of those are the additional tools that QuickBooks has, which would be the classes, the locations, and a new feature that they have, which is tags. And so we'll kind of talk about all 3 of those here in a little bit of detail. So we're going to start with the account and settings. The biggest thing that I want to show you here is kind of your tax form. So as a nonprofit organization, in order for, so if any of you are on desktop, you know you could purchase the nonprofit version of QuickBooks Desktop, which would basically change the names of the reports and change the names of like your invoices to match a nonprofit organization. How you do that in QuickBooks Online is you adjust your tax form. So if we say we're going to do tax form 990 and we hit save, what this is going to do is it's going to change all of the names of the reports. So instead of being a balance sheet, it will be
Statement of financial position.
there you go, statement of financial position.
And I didn't know that. Is that, so are those names already in there? Or do you have to type that in? And
No,
have
the
it?
names, so there are a majority of them that it will automatically change for you. There are others that you can change and adjust them to whatever name you want to as well.
Like if you have
Mhm.
modified cash basis or cash basis, then you could add that in there.
Yes,
Okay.
yep. So that's a big one if you want to kind of change it to that nonprofit version to change the naming on the accounts. The other thing, a couple of other things here I want to show you. Usage, most of you probably know, but with QuickBooks Online, you do have usage limits based on whatever version of QuickBooks you are in. We talked about billable users. Plus version, there's a limit of 40 classes that you can have. Advanced has unlimited. Final thing, so really with sales, if you have any adjustment for your sales, which is any of your invoicing, you can turn on and off those features here. Expenses, so your AP side, you can turn those features on and off here. Advanced is the next place that I really want to go. This is going to turn on and off a lot of the features that you would use on a regular basis. So we talked about classes and locations. That is a feature you have to turn on. So just so it's on already, I'm going to go ahead and turn those on. And then you just hit save. And one thing I didn't, you can change the name of the location. So say you don't have locations, but maybe you have departments, we can turn it on to say departments instead of location. I'm going to keep it location just because that's how I'll refer to it. You know, you have other preferences here. Say you are you're not on a calendar year, but you're on a fiscal year. You can come in here and change whatever year you are. Close the books is another great feature. So kind of in the tax world, our tax return is the Bible. So we like to have the QuickBooks file closed and we like to put a password on it. So then it doesn't allow anybody to make any changes to that prior year unless they know that password. So it's a great, we try to turn that on almost all of our clients. So then that way it saves us a little bit of time, which would also save you guys a little bit of time too by turning that on. And then maybe only giving out the password to a select few people.
Does it only do it annually or?
You can do it at any time.
Monthly, like when you close the month?
Yeah, you can do it monthly. You can do it, you choose your closing date. And you can have it to where so you could do it monthly. If you do a month and close, you could put a password on it. Or you can, so say we're gonna, actually I'm not gonna put it in because it'll then make me put in a password, but you can either do a password or just allow it to get by with a warning. So it'll pop up and it'll say, hey, are you sure you want to do this? And you can say yes or no. A lot of times I click through this, so that's why I like the password because it really stops me. But then, so then if you do the password, you just enter the password. And then whenever you make a change to any transaction, it will prompt you to enter that password.
You know, one reason that we make sure there's passwords on some of these is if you have somebody that's not real experienced in accounting or in QuickBooks and they're helping you or working with you and you closed out a month, but they go in and do some transactions like delete a check or something like that, then it changes your prior year financial statements that you've already printed out. And so it's sometimes a good thing to walk each month as you go. Definitely year.
Yeah.
Because you don't want to go back and change anything that relates to your tax return. But
yeah. So anything that's issued, whether it's monthly financial statements, anything, if somebody changes it, you're having to go back and make sure it ties out. So you're researching and digging in and trying to figure out why. So that closing a password
it
helps.
can cause you to lose your hair.
Yes.
By pulling it out.
So now we're going to kind of go and talk a little bit about the kind of where I think is the hub of QuickBooks, which is your chart of accounts. So when you're setting up your chart of accounts, to me, there's a lot of things to consider, but the biggest thing I always talk about with my clients is keeping the end, kind of the end game in mind. What do you want your reports to look like? How do you want things to be reported? That once you kind of know what you want things to look like, it's easier to kind of back into what your chart of accounts is. And you can always adjust things. You can keep adjusting on your chart of accounts as you need to. So don't think once you have it set, it's set in stone. There's a lot of manipulation that you can do with your chart of accounts. But kind of some questions I ask clients as we're sitting down and kind of talking through this setup is kind of what do you want to see on your reports? You know, if you're printing reports for the board, what does the board want to see? And then kind of taking that to kind of look into your chart of accounts. The other thing is, what will the reports be used for? The reports are what is going to give you information about your organization. So what do you want to use those reports for? How do you want to use them? What do you want to see? The other thing is, what do you want to track? So when we talk about those additional tools, classes, locations, different things, what do you want to track in your chart of accounts? So do we use an account to track it, or do we use a class or location to track it? What do you want to track is another question that I ask. The other thing is with QuickBooks chart of accounts, it does everything in alphabetical order by type. So if we look at type here, we can see like these other current assets. It's putting these other current assets in alphabetical order. So it doesn't give you a lot of room to manipulate it and move things around. If you want things to look, and then this flows over to your reports that same way. So these accounts will come over to your reports in alphabetical order. If you want things to look a little bit differently, the best way that you can do to manipulate those is to turn on your account numbers, because then it goes in and switches it to numerical order. So say you don't want it in alphabetical order, you want something grouped together because it makes more sense. If you turn on the account numbers, then it allows you to choose whatever order you want, or choose the numerical order you want, so then you can get them in the right order. It's just a way to manipulate it. And one thing I didn't show you is, again, under the account and settings is where you turn on your account numbers. Missing it. Enable account numbers. So yeah, so you just come on here and you turn on account numbers, and then you can add your account numbers. The other thing is that I ask is should you use sub accounts? So when you see an indentation here, this is a sub account of a parent account. So this is another way that you could get a little bit more detailed information, but then maybe for your purposes, but then maybe you don't have to show it on a report, because you could do collapsed reports. Just say if you have insurance, for example, insurance expense is a good one, and you have health insurance, and say you have auto insurance, whatever general insurance, you have all different types of insurance. You want to see it broken out, but maybe the board doesn't want to see that way. You could collapse the sub accounts, and so they only see insurance expense. So sub accounts are another good way to kind of get more detailed information, but you have options to where not everybody needs to see that detail of information. And so when we talk about, you know, what's the best way to kind of utilize your chart of accounts is, you know, again, what do you want to see? But then also we talked about kind of the end game. What do you want the end game to be? So a lot of times clients will set things up to where it's easier for their tax return. So on the 990, they may create accounts or create sub accounts that work really well for the 990, and then it's easier to flow to that information or flow to that return or whoever is preparing it. So again, just kind of thinking through what that looks like. So I'm going to have Debbie kind of talk about some nonprofit kind of accounting concerns with chart of accounts and what to think about. And then we'll talk about the additional two.
Something that we can use as the board and we're tracking things. So one of the best things to do is to make sure it's easy for you to use. And so the numbering system makes sense to you. And I would leave, if you're using the account numbers, I would leave some gaps in there so that if new accounts pop up, you can easily fit them in the right order. That's one thing that we've run across. Consistent use of account net assets, those sort of things, just be real consistent with that, because then it makes it easier to make sure it falls in the right spot on the statement of financial position or the statement of activities. So, because a lot of times, if it's not consistent and you'll miss it to get it in one of those statements, and then it'll be out of balance. We've experienced that. It's like, oh, the balance sheet doesn't balance, so that's not good. So that helps in that. The other thing is when you get to the budgeting process in the organization, you have a chart of accounts that's set up that helps the board or the executive director or whoever's doing the budgeting to align the budget to match up with those line items in the actual financial statements. So that when you go throughout the year and you watch the variance in the budget, then it'll print out per the account line items. And like Vicki said, if you have sub accounts there, you may not want to budget every single sub account, but you want to budget it at the parent level, the normal level. And then so when you collapse that, then you can still see what you've budgeted for that line item. And so it's just kind of thinking through that process, because you want it to be as easy as possible to be able to watch the budget. And because there's going to be people on the boards or in management that don't understand financial statements. And so whatever it makes it easier for them to interpret what's going on is the best. And then the number one thing is the accuracy of the numbers in the trial balance. And so that's another reason to make sure that it's really simply set up so that you understand it and that you can go in and reconcile every single one of those accounts pretty much on a monthly basis, not the P&L side, the activities, but the balance sheet or the statement of financial position. Because if those numbers are not correct, then the statement of activities is not going to be correct. Your budget analysis is not going to be correct. So the number one thing is to make sure it's set up easily for you to use and to make sure that those numbers are accurate every month. And then with this note we have about formatting to help in preparing the financial statements. That's kind of what we just went over. I mean, that's another thing. If you're setting up the accounts and the numbering to make sure it flows through and easily set up on the statement of financial position or this statement of activities, so it flows okay and if something doesn't show up in the wrong spot, because then that can throw it out of balance too. But so those are the kind of things that we look at when we're looking at trial balances.
Yeah, it's very easy to get, kind of to tag on to Debbie, it's very easy to have your chart of accounts kind of get out of control because you think you need all of that detail. That's when you need to kind of take a step back and kind of look at what you created on your chart of accounts. What do you really need? Can it fit into another bucket? Can you combine these together? And is there another way that you can let QuickBooks do the work to be able to get that information for you? So kind of using some of those other tools. Because you want these reports to be meaningful and get information out of them. And if you get too detailed, it's just going to be hard to even understand. So yeah, the simpler the better, but still making sure you're getting that right information.
Mm-hmm.
I think it makes a little bit more sense to kind of go a little bit out of order. Adam, if you're okay talking about the 990, and then I'll talk about the additional tools.
Real quick, there's chats in there. I don't know.
Oh, okay.
Carrie was just saying that you keep freezing up, Vicky. So I'm trying to keep an eye on that and see how often it's happening. I don't, sometimes the rain interferes with our internet service here, so I'll just keep an eye on it.
There's the weather again.
Okay, thank you, Cindy. Okay, Adam, you want to go ahead and talk about the 990?
Sure. So the 990, depending on which version you file, the 990N is just a postcard. You say you've got less than 50,000 revenue. There's not a lot of detail that you need to track in QuickBooks to be able to file that form. But the easy and then the full blown 990, you've got all these different statements that you have to provide the detail for. So there's the statement of program accomplishments. This is kind of a summary of your main programs of the organization, what you've brought in for those programs and what you've spent. The statement of revenue, you need to break down the detail between your contributions received, your program revenue, and then miscellaneous items of income. And kind of when I'm helping clients set up their QuickBooks accounts, and if they're not having audited financials or anything like that, a lot of times what we'll do is we'll pull out the tax return and kind of break down their chart of accounts in there. So it's just easier to flow. And so you're not having to go into the detail so much. You can just pull up a report and see, here's my interest, here's my program, here's my contributions. And then the statement of expense, if you've got the version that allows class tracking, you can set it up so you can have a class for each of your programs and then a class for management and for your fundraising expenses, that if you're required to break those out on the 990, again, that's an easy report run. There's no manual manipulation of the data you're having to do. So it's just as much as you can do in QuickBooks, you do it once and then you just click the button and it's there, instead of having to go through every year and allocating this expense between every column. Some other parts of the 990, if you're using the full version, there's the Schedule D, which is the supplemental financial statements. That kind of ties back to your balance sheet, statement of financial position. So you've got different things to report there. If you've got any fundraising or gaming activities, that shows up on your Schedule G. Again, you can break that out to a class or a sub account to track that on your financials as well. Schedule I would be your grants and other assistance. And then if you've got any unrelated business income, you can set that up as class or its own set of sub accounts to track that, so you can watch it as you go out through the year and kind of have an idea if you're going to be subject to the UBIT tax or not. And then if you're running payroll through QuickBooks or how you record payroll in QuickBooks, there is the compensation of officers that you have to list on the 990s as well. So if you're paying officers, and that's anyone with an officer title or anyone who operates in the function of an officer. So if you're a controller and you handle all the financial decisions, you're supposed to report that compensation to your controller as well. And so if you can provide that information on your financials, then you're not having to go through your payroll summary and pick each one out. It just makes it a lot easier.
Awesome. Yeah, so we've talked a lot about classes and locations, but we haven't really kind of shown you here in QuickBooks. So I'll kind of walk through what classes, locations, the difference between classes, locations, and tags are, which then we'll kind of talk through. I wrote a couple of the scenarios that Adam wrote down, and we can kind of walk through setting those up and show you what that actually looks like. So basically you have three different options. Classes essentially allows you to assign, so if we use programs, for example, so you can assign any transaction, any line of a transaction, you can assign a class to it. So if we come in here and we have an expense, or we're writing a check to an individual or to a vendor, and say we're you now have this class column because we turned those on. You won't have this class column until you turn it on, but we can type in programs. So we can create a programs class. And classes allow you to do each line of your transaction going to a different class. So say we are now going to set this one up as a contribution. And so And so classes allow you to do each line of your transaction. So any transaction, a deposit, a check, a journal entry, anything, you can assign each line of the transaction to a certain class, which then when we go to reporting, you can see essentially, if we're looking at a statement of activities, you could see a statement of activities, which shows your revenue and expense for that class in a column format. And then locations. So the difference between location is the entire transaction. So if any expenses you do always go to contributions, you never break them out by line, you could use locations and it's essentially going to do the same thing. You're just not having to include a class on each line. You could just do the entire transaction as a whole. And again, we saw you can change the name of those. So if it matches more to what you're doing in your organization, you can change the title so it's not location. The newest feature that QuickBooks has, and I'm going to be completely honest, I have not quite found a good use for this yet. They're really trying to push it, and I just haven't got on board with it yet. That's not to say I won't eventually, but I struggle with it a little bit, are their tags. So with tags, okay, so when we talked about locations and classes, we know that that isn't an option for you until you get to the Plus version of QuickBooks. Tags are available in all versions of QuickBooks. So Simple Start all the way up to Advanced, you have the option of tags. How I look at tags, I look at it like Instagram. When you do a hashtag, whatever, to make sure you can go back and look at your pictures, that's essentially what we're doing here with tags. One thing I didn't mention with class or location, if you have the classes and locations turned on, if you don't enter one, it's going to warn you on that transaction. Hey, do you want a class? Hey, do you want a location? And then have you go back in and enter that. With tags, it's random. So it won't ever tell you that you didn't pick up a transaction. You can pick up revenue, expenses, balance sheet. You can pick up anything with tags. So it's a little bit, there's less control with it. And so to me, I think it's harder to make sure that you've picked up everything that you need if that's how you're trying to track things. So again, I think it's a little bit, I can see the benefit of it, but I just haven't quite found that right use for it. I do have clients that use it all the time. My guess is, I don't know if they go and run reports off of it, but you can run reports by tags too. I'd really like to know somebody that uses it and kind of see how they use it to see how I could incorporate it. But like I said, just haven't quite found that yet. But I always like to mention it just so you know it is an option because it is available in all versions.
So is it like, if you want to track certain types of like disbursements or something?
So if we use the program,
If you're
for
not
example,
using it like by accounts, I guess. but-
yeah. So if we use programs by example, so say you have, programs that are classes, you have programs that are, give me some program examples. Like
Day
again,
services.
yeah. So you have classes, you have day services. You would have basically a tag that says day services. And you would create a tag. And then anything that's related to day services, you would just include that tag. And it's still going to pull over into reports by tags. But you don't know there's no like unspecified column. So you don't know if you've captured everything for that tag.
Yeah. Interesting.
Yeah. We'll save that just so we have some information out there. So one other thing I kind of wanted to show you. So we talked a little bit about when we were talking about your chart of accounts that you want to look at that as you are getting started, but also as you are, if you've already have it set up. So everything we talked about, you can retro add into your QuickBooks file. You can turn on account numbers. You can adjust your accounts. You can create sub-accounts. You can create parent accounts. The other thing I wanted to tell you, so because there's usage limits on your chart of accounts too, you can merge accounts together. So say you realize, hey, we'll go ahead and walk through one here. Just say I created services and it really kind of is the same as sales of product income. If we come in here, and what I always like to do is edit and copy the name that I want it to be, and you want to take note of the detail type, we can then come in here with services. And by naming the exact same thing, and if we change this to sales of product income, and we hit save and close, it's going to tell us, hey, we're changing the type, that's okay. But then it's also going to tell us, hey, there's another account with this name, would you like to merge them? And if you say yes, it will merge those two accounts together. And then you only have services. So any transactions that were in, whichever way I went, services or sales of product income. I think I went to sales of product income. Everything that was in services that is now in sales of product income, all those transactions will merge into that account. The one thing you want to be careful of is once you do that, you can't undo it. You're undoing it manually and going back in and figuring out how to do it. It's a great feature to really clean things up. However, be cautious with it because you can't undo it once you do it.
So you don't have to manually transfer those.
No, you can do it in a couple quick steps. Okay. So does anybody have any questions on chart of accounts or in the setup before we move on? Okay. So I'd like to look at, so if any of you are familiar with QuickBooks Desktop, they had kind of modules is what they called it. So they had like the AR module, the AP module, the payroll module. That's kind of how I like to kind of chunk up QuickBooks Online when we're talking about it as well, is kind of in those modules. They don't call them modules anymore. However, that's kind of how I like to still refer to them. So we're going to start with talking about the accounts payable module. Essentially what accounts payable is basically a bill that you receive from a vendor that you need to record the expense, but you anticipate paying at a later date. And so it basically records as a liability account on your balance sheet or your statement of financial position.
Yeah,
That's right.
that's right.
So it's just, and this basically is all of the expenses or vendor bills that you have yet to pay. It kind of sits here in accounts payable. Kind of when do people use it? You can use it if you want to in QuickBooks at any time. However, if you are keeping your books on an accrual basis, that's when you would want to use accounts payable because that follows the accruals for accounting. Then the other thing is, if you just want to keep track of the bills, the vendor bills as they come in, you can use the accounts payable module without being keeping your books on an accrual basis. If you just want to keep them in there and then run reports to be able to determine which bills you want to pay, you're able to do that. QuickBooks allows you to switch your reports from cash or accrual, which will remove that accounts payable for the reports that you do end up printing. Kind of how accounts payable works. You essentially enter a bill into QuickBooks, which records the expense and then records it to accounts payable. Then you pay the bill and then you enter the check or you print the check, whatever you need to do. That takes that bill all the way through the process. So when you record the bill, it puts it in accounts payable. When you pay the bill, it takes it out of accounts payable. And then when you write the check, it completes the transaction all the way through. As I mentioned before, accounts payable is available in all versions except the Simple Start version of QuickBooks.
So is the Simple Start just pure cash?
Simple Start is,
only?
You can't, well, I take that back. You can do accounts receivable in Simple Start, but if you're wanting to do AP, it doesn't allow you to do it.
Okay.
And you could, if you're doing AP manually, you could record an AP entry. It just wouldn't allow.
Do a journal entry
Yeah,
or something. Okay.
yeah, it just wouldn't allow you to keep track of it.
Still use it. Just
You could still use it,
not the module.
not the module.
Okay.
Yep. So I'm actually going to start with so anybody you pay is a vendor. So we're going to start with the vendor center, essentially here. And you can create a new vendor. When you're creating a new vendor, you can kind of create it on the fly when you're entering a transaction, or you can create it ahead of time and set up all the details. The only thing that you need when you're creating a vendor is the name. You don't have to have any of the other information recorded into QuickBooks. However, it's nice to have this information. And it's also nice because this then potentially feeds into other areas of QuickBooks. So if you are printing checks, it would be a good idea to have the address information in here, because then you're able to print the address on the checks. Another thing is there's this nice feature. This is pretty much everywhere in QuickBooks, but you can add an attachment. So if this vendor sends you any information that says, hey, we have an address change, or we have something, you can take that PDF and drag it and drop it into their vendor setup. So it's easy to go back and look, hey, this is what they told us. Here's this information, you can have it. The W-9, if you're going to send them a 1099 at the end of the year, you can attach their W-9 here. So then you always have that information directly with that vendor. That is the other thing also that, if you do print 1099s out of QuickBooks, you want to basically fill in that information also. So then it flows through to those 1099s that you process through your QuickBooks file.
Do you tag each individual vendor as to whether or not they should get a 1099?
If you're using the 1099 feature within QuickBooks, yes. So you can say, I track this payment for 1099. And then when you set up the 1099 section, you basically say, you don't tag each vendor, you tag the accounts. So if your repairs and maintenance is a 1099 account, you would basically tag that account, and then that's how it knows. And you say it goes to this box on the 1099, and then that's how it knows what to include on those 1099s.
So like if you've got one that, if it's a corporation or something that does not get a 1099, does it know that? Or
You would just need to not mark it,
uncheck it?
uncheck it. Yep.
Gotcha. Okay.
Yep. And there's a 1099 report that you can print that basically, if you tag them for a 1099 and then you go through it and you realize, hey, they shouldn't be, you can then go into that vendor, untag them, and then it won't go through the 1099 process. So when we talk about creating a vendor on the fly, so say we have a bill
And you'll appreciate it.
it'll say, as you start typing, it won't show up. So then you can just add new, which then it's going to bring over the details over here. You can fill them out. Or again, if you don't want to fill out the details at this time, you can just hit save. And now you're able to use that vendor. And anything that happens on the vendor setup will pull over into the bill. So if you have the address, it'll pull over. If you set terms for that vendor, like they give you net 30 terms, net 15, you can set those terms. So then it'll automatically calculate the due date for you on that bill. Kind of like we mentioned, locations and tags, you can enter those on bills as well. So let's go ahead and pay the nonprofit chamber, and we're going to say, let's look at the account, advertising. And we're be very generous, and we'll pay him $1,000. And then we'll call this, we'll use a program class. I'm going to keep using classes so we can, then when we get to the reporting and I show you those reports, you can really see how those classes kind of flow in. So as we enter transactions. So now we're going to go ahead and save and close this transaction. I do want to mention, a lot of times you probably see save and schedule payment. QuickBooks has partnered with a company called Melio, and you can do automatic payments through QuickBooks, which is what that schedule payment is. I probably won't go into a whole lot of detail with it, but if it is something you're interested in, just let me know and I'd be happy to visit with you about it. But it allows you to basically pay your bills electronically versus having to write checks. So we're just gonna save and close this transaction. And so now we're gonna kind of walk through this whole process. So now we've entered that bill for the Kansas Nonprofit Chamber. The next step in the process is we have to pay it. So we're gonna come out here and we're gonna go to pay bills. And we're gonna see every bill that is sitting out here to be paid. And so you can see this Kansas Nonprofit Chamber is sitting out here. What you wanna do here is choose the right bank account or credit card account that you're paying that bill from. Whatever the payment date is. If you are handwriting the check, you can put the check number in here and it'll assign that check number. Or if you're gonna print it, you can do print later, and then it'll stack all of those up for you to print all your checks at once. You just choose the bill that you're wanting to pay. If you have any credits for that vendor, it will try to automatically apply those credits. So if you don't want to use those credits on that transaction, or you're not sure that, hey, that credit is valid, or I should be using that credit, you can always change the payment amount to whatever you want. Or say we're gonna pay this in 2 chunks. You can override the payment amount and it's going to only pay what you want to pay. In this case, we only did 500. It will still leave 500 out in accounts payable. So this payment amount is really essentially what dictates what your check is going to be written for, or what that payment is going to be for. We're going to go ahead and pay them the full amount. And so this will clear this transaction completely. So we're going to do print later. So we'll walk through that here in a minute, but now we're going to go ahead and save and close. And now this bill has been paid. We walked through those steps in the process. Now that we have paid the bill, the next step is going to be to print the check. So if we go out here, since we did print later, we go out here and we go to the print checks option. This is going to list any checks that we have scheduled to print later. The one thing to notice here is that if this is the first time that you're printing checks out of QuickBooks, you're going to have a setup screen here. You should only have to do the setup one time, or if you change printers, I would recommend doing the setup because each printer tends to be off just a little bit. It's pretty simple. You choose your check, whatever check type you've ordered. You basically view and print the sample, and then you basically print it and you hold it up, make sure everything lines up. I struggle with this a little bit. I don't know why, but you have, when you say no, continue setup, you basically do the grid. You basically move this grid however you need to. So this is the only option you have to move. And then, so sometimes I just play around with the numbers and I probably print 10 pieces of paper in order to finally get it right. So if somebody has a quick and easy tip on how to make that easier, let me know, but it seems to be hard for me.
Whenever I do it, it seems backwards, like up is down and down is up and left is right. And yeah.
I struggle. So now that we've done this setup, if we go in here and when we print checks, you can see now that this Kansas Nonprofit Chamber check is here to print. So we just put in whatever check number we're starting with, hit preview and print, and then we can print the check. And then we've completed the entire AP process within QuickBooks.
Those credits, are they held in the vendor? Is that, so like when you get a credit on an invoice, you manually put that into the system?
So if you have, so say you overpaid or a vendor has sent you a credit for something that you've returned, there's a vendor credit option here. And so it's going to look very similar to the bill. You fill it in based on the credit that the vendor sent you. And then that credit, because you're choosing that vendor, is associated with that vendor.
So then when you write the check, you can go in there and tell it
To use that credit.
Okay.
In that credit column. If you somehow overpaid, so if you changed your payment amount and you've paid more, that credit will sit out there also. So you didn't necessarily enter it through a vendor credit. You've just overpaid that vendor.
So it.
That
tracks
credit will
too.
sit there also, and then you can use that on any future payments.
But it notifies you every time you write a check to that vendor.
It doesn't
Exactly.
notify you, it automatically fills in that credit. That's how it notifies you. So it
Unless
doesn't
you
say,
decide not to
hey,
apply it.
yes.
Okay.
Yeah, so some people actually, maybe they have a credit out there, they're not sure why.
Uh-huh.
It keeps auto applying that credit, and then you just have to delete it till you go in and figure out what it is and make the adjustment to correct it. So you want to watch it, because I know some people are like, I have this credit out here, I'm not sure why, I keep having to change this. Make sure you see that credit and you know that credit is valid before you just.
If you short somebody a check and then.
Column as you're paying bills.
Okay.
So just like almost everything else in QuickBooks, there's multiple ways to enter transactions. So the bill that we just entered through this Plus New, which is a lot of your transactional data, you can also go right to the vendor. So say we're going to pay Books by Bessie, you can come over here from your vendor center and just hit create bill, and it's going to take you to the exact same place. So some people like to go directly to that vendor. Maybe they only have one that they're going to pay. They can easily just pop in here. Say you're going to write a check. It'll take you to the check screen. It's just a quick, easy way from that vendor. Now it fills in all the vendor information. You just have to fill in the information from that bill. So when we talk about accounts payable, we're talking about bills that we are entering into QuickBooks to get the expense recorded, but we're anticipating paying those at a later date. The best report to kind of see where you are at with your vendors and what you have outstanding is to look at your accounts receivable aging or your detail report, your summary or your detail report. I like to look at the summary because I can click in and I can still see the transactions, but the detail will just basically break out each bill by vendor. But I'll go into the summary report here. Maybe. There we go. So essentially, we talked about entering the due date on your transaction. The due date is what dictates the aging of your bills that you have entered. So if it was due, if we still haven't hit the due date, it's going to be in the current column. If it's past due, it'll fall in the 1 to 30, 31 to 60, 61 to 90, and 91 to over. If you're in anywhere from the current to 60 days, it's usually not too concerning. You're probably okay. There's probably a reason. If you get into the 61 to 90 and 91 to over, those are the want to look at and make sure that should have been recorded, or they weren't recorded in error, or you may know why they haven't been paid, but you probably want to kind of watch those because you want to stay current on your AP. So that's typically what I watch for when I look at an accounts payable aging report. And when I said I do the summary, what I like about this is I can click on the number and it's going to tell me everything that makes up that dollar amount. So all the bills that are outstanding, by clicking on it, it'll show me for that vendor. The other kind of report that I use a lot with accounts payable is the unpaid bills report. And what I like about this is, say you do your check runs every 2 weeks. And, you maybe enter all the bills, but somebody tells you which bills need to be paid. You can print this unpaid bills report, and then they can highlight or let you know, hey, these are the ones I want you to pay with this check run. So there may be a reason that they want to hold one. There may be a reason that they don't want you to pay it, or they want one to be paid sooner. This is just a great report to kind of use to let you know what is outstanding and then what the individual wants paid. And it tells you how many days past due. Negative, of course, it's not past due, but this one's 23 days past due. It just kind of tells you the status of those. So that's another report that I really like to use when I'm looking at accounts payable.
Is there any benefit of entering it into AP if you're just gonna pay it right away?
There's not, which is what we're gonna talk about next. So if, you're, no. Great question. So I do have several clients who feel like you have to enter bills and walk through the entire accounts payable process. And if you have a bill, you're gonna pay it that day, it's not gonna sit out there, you don't anticipate it paying at a later date, there's no reason to go through AP. So to do that, again, under the plus new, you would have the check option. And so the check essentially is the bill. The only difference is we're gonna choose the bank account right here. So we're gonna choose the checking account that we're gonna pay the Kansas nonprofit again. And then you have the option of either, again, handwriting a check, you can enter the check number or print later. You can print the check at a later date, and then you choose your category again. Put a description. Payment of $1,000. And then we're gonna do contributions. Oh, I always said that. In our class. So this just takes away the bill portion of it. So we took away 2 steps, which is the bill and the pay bills, and we just immediately went to the check. And so you would use this if you are, if you enter everything on a kind of a cash basis, you enter things after the fact. This is a great place to use the check option. If you are just entering a one-off bill, one-off check that you're wanting to print right there, check is a great way. Even if you use accounts payable, the check is a great option for you. The other option that you have is you have expense. The only difference between check and they call it expenditure here is that you don't have the option to put in a check number. So it knows that it's an ACH transaction. So if you have anything that automatically comes out of your account, you can use the expense option, and then you just don't have you don't have to enter a check number for that transaction. The other reason that you would want to enter through maybe the expenditure is if you have credit card charges. So if you have credit cards that you use for your organization, expense is going to be the way you're going to enter those credit card charges. You just want to make sure that you choose your credit card in your payment account. And then that's going to record those to your credit card liability on your balance sheet. You want to, when you are using credit cards, you want to set them up as a credit card type. So you can see the credit card type here. And then you want to make sure that you reconcile those credit cards just like you do your bank accounts. That just ensures that you've recorded all of the charges that have happened with that credit card. And then that way you have all of your expenses then recorded. The one thing I want to kind of point out with credit cards is it kind of goes back to your chart of accounts. So a lot of credit cards now, you have multiple credit cards to different individuals in your organization, but you get one credit card statement. So the best way to set that up is to create sub-accounts for those individual credit cards. So if we come in here and we're going to set up a credit card and we're going to say user number 1, and we're just going to create it as a sub-account for MasterCard. What that just allows us to do is we can enter all the transactions that are associated with that user to that user, but because it's a sub-account, we can reconcile MasterCard as a whole.
For the one statement.
For the one statement that you get. This comes in very handy if you are using the bank sync feature and you're pulling in your credit card charges, because then it allows you to take the activity for just this credit card and pull it in, just this credit card and pull it in. So this is a great way to set it up, especially for the bank sync, which we'll talk about a little bit later.
I know like a lot of churches they'll have a Sam's account, and there's, I don't know how many people, usually 20 people have a Sam's card that they can go out and purchase things.
Mhm.
So yeah, so that would be a good way to set those up. And then you have to require they bring the receipts. That's the big one.
Yep.
And then enter them into their, off of the receipts, is that right? Or,
Mhm.
and then you,
Yep.
Like a
So depending on how you enter your transactions, yeah. So if somebody brings you in a receipt for Sam's Club, you would come in here under expenditure. enter St. Cloud, which isn't here, books by Betsy. And then whatever information is on there, so office supplies. And then you would put the amount on your Sam's receipt. And then what you can also do is if you really want to keep track of your receipts and you need to have that documentation, you can scan those to PDF and you can attach those receipts to your transaction.
Oh, yeah, so that's fairly new, isn't it?
No, it actually was in the desktop version as well. So
It
it's been
was?
around, yeah, for a
Maybe
while.
people are using it more. I know, just on an audit side, when we go in and audit companies, we're now able to utilize that feature instead of having to go through all the physical paper files.
Mhm.
So that's kind of nice.
Yeah, it's, so with the desktop version, you had to have, there was a file that they were all stored in. And so you had to have that file on your computer to see them. So if somebody would
Okay,
send
maybe
us
that's
the
what was
file, we wouldn't be able to
different.
see them. But now that it's online, yeah, anybody who has access to your file, whether it's your accountant or any users, if they have access to that area, they'd be able to see those attachments that you would attach.
Okay.
So I've kind of talked through accounts payable and
So on accounts payable, and it's going to be the same for accounts receivable, but in a nonprofit organization, cash flow is usually pretty significant, and trying to watch that, especially if it's a smaller nonprofit or one that's fairly new. I know with the chamber here, we have that situation that, especially during the year, you have peaks and valleys as far as when the cash flow comes in. And so one of the tools we use is the accounts payable aging that Vicki went over. And you can look at that to see when certain bills are due and then, manage it that way instead of just paying bills as they come in or trying to manually try to figure that out. And so that's one helpful tool to use. The other thing is, and plus it makes a difference whether or not it's accurately input. And so that's another reason to reconcile that every month and make sure those amounts are correct. And then the different types of accruals, I don't know, do you get into that in the QuickBooks module or?
no, as far as accruals, we really just talk about accounts payable and accounts receivable.
Okay, so along the same lines as accounts payable, and you've got some other accruals as a nonprofit that depending on how large the nonprofit is, that you'll be making, like accrued salaries and wages, accrued compensated absences, which is vacation or things like that, or accrued taxes, other things like that. And so those are things that can be manually entered as a journal entry into the system. And then you reconcile that and adjust it every month just to make sure, because if you're not on the cash basis, if you're using an accrual basis, you want to make sure that those entries are made each month at month end, just to accurately show the actual expenses of the organization and then what is planned for cash outflows. Because if you don't know what all things are coming up, then it's hard to predict the cash flow. And I know, we've had a couple instances, like if, payroll couldn't be paid on a certain date, but it's still out there. You need to make sure, even though you're not going to cash pay it, make sure it's accrued in there through a journal entry, just so it accurately shows where you're at on your budget. Because what's flowing through the expenses is what you're comparing to your budget. So that's really important for the executive director and for the board when they're trying to manage the financial statements.
Yeah, so that's a great, I don't necessarily have journal entries in here, but this is a great probably place to kind of talk about journal entries. So if you have those accruals that you need to enter to make sure your statement of financial position is correct, if you just go to the plus new again and click the journal entry, You basically choose your journal entry date. If you have a numbering system, we have a numbering system that we use. And then you just choose your account. So if we have accrued salaries, let's go ahead and create that account. So again, you can create accounts on the fly, just like we could create vendors on the fly. But I'm in the wrong account, which is mine. There we go. So it brings up the creating a new account box. A couple things that I want to point out here is you want to make sure you get your account type right. So we're going to create this as this would be a liability, right?
Yes.
Okay.
Yeah, currently.
I don't do a lot of accruals in this way, so. Then you also have this detail type. This is something new with QuickBooks Online. And it basically, the main purpose is just to help you kind of dial in on how you want to name your account. However, I have found that it has come into play one time in another way. And that is if you have a separate point of sale system. The client I had a point of sale system, and in order for the mapping to be correct, you had to have the detail type set up. I believe it was a trust account, or we had to have it set up exactly how it needed, how the POS system wanted to see it in order for it to flow through and map in correctly. So honestly, that's the only time I've really seen that detail type come into play, other than it's just here to help you name your account. But a lot of times you know what you're going to name your account. So I just choose whatever is the closest. And then we'll go ahead and exclude those. So we'll do our accrued salaries and say we're accruing 1,500. We'll do wages, which is there. Let's see, salaries in there. Yep. We'll just create that officer compensation we talked about earlier. And we'll create that account. So with journal entries, if you're familiar, you want to make sure they always balance. So your debits and credits have to balance. It won't let you save it if it's not.
Thank goodness, it
Yes.
used to.
Yes, yes.
The old QuickBooks, yeah.
Yeah, so you can create as many lines as you want. Again, you can have classes for each line on your journal entry. But most of the transactions already tell you what one side of the transaction is. This just allows you to have more flexibility, and you choose both sides of the transaction that you want to be recorded into QuickBooks. So we'll just save a new. So that would get your accrual into the system. So if we just really quick go look at your statement of financial position, we should now see those accrued salaries of $1,500.
You know, another thing just might be worth mentioning is, you know, with the recent COVID environment, there were a lot of funds and federal funding that came through, and just recording that on the nonprofit books. And so there were EIDL loans, PPP funds, and some of the PRF funds. So of course you'd have to set up an account for the PPP loan fund, and then most of them were forgiven. And so you'd have to make a journal entry to get that out. But the EIDL loans, they've postponed the repayment of that. And so if you set that up in there as a liability, you'll also have to accrue interest until the point in time that you start paying on it. And so that would be these journal entries that need to be made. And then once those payments are due, then I'm not sure. So would a journal entry be made to make the payment, or a check that would go against the EIDL?
A check would be the better way, is to record a check and then break out the principal and interest on that check.
Okay.
And so instead of going to the interest expense account, you would go to the accrued interest account instead.
Okay.
Yeah. So when you would go and we're gonna enter a check, say we're paying that EIDL loan, you would have, let's see if there's any. Let's create a loan account. There's like one loan payable, so you would put the interest portion. And then you would put, if we had done the accrued entry, or accrued interest, then you would come in here and you record the interest portion to accrued interest.
Okay. It's just another thing to make sure that the nonprofit financials are accurate as far as what's due and because the dollars would have came in, so you would have needed another offset to that journal entry to get it recorded.
Any questions on accounts payable or checks or wondering anything? I think at this point, we can take a little break here and everyone stand up, stretch your legs, get a snack. And then we'll come back and we'll start talking about accounts receivable. So we had accounts payable, now we'll talk about accounts receivable.
Hey, Courtney, what time do you want those that are online to be back?
Oh, yep, sorry. Let's come back about 5:10 after 10.
Okay.
Or 10 after 10. Get started.
Okay, what's anything?
That's so true. Okay, so kind of keeping in line with the modules that I talked about, we're gonna now move on to the accounts receivable module. So just like accounts payable is for bills, accounts receivable is for invoicing. So if you're doing any invoicing out of QuickBooks, accounts receivable is where that would happen. Again, the accounts receivable is an asset on your balance sheet, and it represents any funds that are due to your organization in the short term. So anybody that owes your organization money, sometimes you can send them out an invoice, and then that's what they can use to pay you. When is it used in QuickBooks? If you, again, are required to keep your books on an accrual basis, accounts receivable is an accrual account. So you would want to use accounts receivable. And again, just like like accounts payable, if you run your books on a cash basis, you can still use the accounts receivable module. When you run your reports, you can just toggle between and it will remove the accounts receivable, but it at least allow you to keep track of it. And essentially an invoice is something that you send out where you anticipate receiving the funds at a later date is when you would use accounts receivable. Just like accounts payable also, there is a flow to accounts receivable. The first step is you create your invoice in QuickBooks, and then that records your revenue and then records your accounts receivable. Then once somebody pays you, you need to receive the payment, which is the next step in the process. And then the final step in the process is to record that deposit into QuickBooks. So in order to relieve your accounts receivable all the way through, you'd have to go all the way through that process in order to relieve that invoice in the file. So if we looked at accounts payable, that's anybody you pay, anybody you receive money from as a customer. So we're going to go and kind of come in here on the customer screen. And with the customers as well, the only thing you have to have is the name. So that's the only required field for a customer. However, there is a lot more information here that can be filled out. So again, address, phone number, contact, whatever information you need. A big one on the accounts receivable side is an email address. QuickBooks allows you to email out invoices. And so if you have an email address on the customer setup, you can then email that invoice directly to that recipient, and then they receive the invoice that way. We'll talk about it a little bit later. If you have QuickBooks payments set up, they can also pay directly from that invoice that you've emailed to them. So it kind of eliminates the mailing process, and then it eliminates getting the check in and having to process it. The other thing I wanted to note here is we also have the attachments that you can do. So any information you get from this customer, say they are, say you sell some products, and this individual maybe is a tax exempt customer for whatever reason, you could attach that tax exempt form here. And so then you know that, hey, I don't charge them sales tax. We have that information because it's required to be on file. So you can attach that here. You can set up the terms. So whatever terms you give that customer, you can set those up here as well on how soon that they need to pay you. So yeah, there's several different additional information that you can fill out here. And this just, again, whatever you fill out here could affect some other area in QuickBooks. So you want to fill out as much as you need to be able to do what you need to do, but you don't have to fill it all out for every single customer. So we'll go ahead and save this customer. So the way invoicing works, or the way the accounts receivable works in QuickBooks, is you have products or services that you sell or that you offer. And basically that is how you basically invoice in QuickBooks. And that creates setup on the back end of how it gets recorded on your statement of activity or your statement of financial position reports. So in desktop, it was called items. So if I interchange those two, products and services and items, I apologize, it's habit. So if we look here at your products and services, this is going to be everything that you offer. So you can get as detailed as you want here on the items that you offer. And then when you are creating these, you basically record the income account that this gets recorded to on the back end. So you may only have one income account that you have on your statement of activity report, but you could have several different services that you offer and they all flow into that one income account without having to have it broken out in both places. What's nice about this is another way when we talk about the setup of QuickBooks, this is another way that say you only want to use, it doesn't make sense for you to break out your income into different categories, but you want to see how you're doing on a certain program that you offer. So a certain class. So if we were looking at this QuickBooks class, we could create a service that we offer and we could call it QuickBooks class. And say we go just to the sales of product income account, and we'll have everything set up here. We'll save and close. We can run a report on this QuickBooks class that we set up to see exactly how much revenue we've brought in for that particular class. So it's just another layer of letting QuickBooks do the work for you to be able to get the information that you need kind of on the back end. I'm not sure if anybody deals with sales tax, but you can also basically determine if this item that you are selling is taxable or not. Again, in certain areas, QuickBooks really tries to be smart and it wants you to choose what type of service it is or what product you're selling, and then it'll determine the taxability for you. I must be a control person. I just like to market myself. I'll do the research, find out if it's taxable or not, and you can just mark those down here. And then whenever that item is used on an invoice, it will show up as taxable. If you say you have a particular customer that did provide you an exempt form, you could mark that customer as exempt from sales tax. That customer information will override your product and service setup. So even though your product and service may be taxable, if the customer is non-taxable, it will not charge sales tax on that invoice. I'm not sure if sales tax pertains too much, but just wanted to at least point that out to you.
Is there a limit on how many customers you can set up?
There is no limit on customers. There's no limit on items. Yeah. Yep. And honestly, I haven't run into anybody that's had any issues with the amount that they have in their QuickBooks file. So you basically have three types of products and services that you can offer. Inventory would only be available in the Plus or the Advanced version, but inventory is basically anything that you want to track the quantity of. Non-inventory is a product that you sell that you don't necessarily need to track the quantity, and then service is essentially a service that you provide. The bundle what the bundle is basically, say you have a QuickBooks class, but then you also, the chamber is great and they're not charging us for the meal, but say you have a QuickBooks class and you also charge for the meal. You could create a bundle that's QuickBooks class that would have the class and the meal. So when you use that QuickBooks class item, all of those items will pull up. So it just allows you to group items together and pull them all over on one invoice using one line item. On your item or your products and services, when you set them up, whichever one you set them up as, whatever type, you can change the type if it's a service or if it's non-inventory. You cannot change it if you set it up as an inventory item, which makes sense because you have a quantity out there. There's information associated with it. So if you accidentally create one as a non-inventory and it needs to be a service, you can go in and just change that type for that item that you just set up. So basically, these products and services flow into your sales forms. And so before we kind of get into those sales forms, I'm going to talk about the customization of the forms because you're able to do a lot of, so we'll just kind of use the invoice to start with. You are able to do quite a bit of customization with each sales form that you do utilize. So if we come in here to the gear icon, which is where a lot of the settings are, and we go to custom form styles. Basically, we can come out here and here's the default that's set up. We can edit a template that's already here, or we can create a new one. So we're going to go ahead and create a new template for our invoice. And you can do a lot of different things. So design, color, add your logo, change your font, make it look pretty. You can do all of that kind of on the design part of it. The content part basically allows you to choose what you want to show on your invoice and how you want it to show, where you want it to show. So you can kind of click these pencil marks here and it opens up different options for you. So if you want your business name to be different, say you have different locations and you want to have that location in your business name, you can go ahead and add this in here and create a template for, so say we have north and south. You could create a template that your invoices for your north location and invoices for your south location, all within the same QuickBooks file. So it's easy to just pull up the template and everything that you save will be recorded. So then that way you can use it on the invoice that you're sending out. You can also change, what you see on this form. So if we go and we click, go back in here. So now this is the template that I just created. So we're going to go back and edit this template. And we're now going to go back to content and we're going to edit this section. So you can choose what columns you want to show on your invoices as well. So if we want to add a description, we can add a description. If we don't want quantity on there, we can take that off. So you can pick and choose what you want to see on your actual invoice when it's printed. The other big thing with templates are emails. So if you do use where you send out emails within your QuickBooks file to your customers, a template is another great way to differentiate on how you send out your email. So again, if it's to say you're sending them out for, your invoices are for programs, you could have a separate email body of your email that's for your programs, and that's how you word it when you send out an invoice for a program. And then if you have one that's for a contribution, you could change up the email, the body of the email that goes out when you send out an invoice for a contribution. So it gives you a lot of flexibility and it's easy to just go in and toggle between those templates. So then that way you're not having to change it per invoice that you create. You're letting QuickBooks do the work for you. You're setting it up once and then kind of letting QuickBooks do that for you. And you're just toggling back and forth between the two. Yeah, we talked about. So now we're going to actually talk about the different sales forms. So you basically have two different types of sales forms. You have an invoice, and then you also have a sales receipt. The biggest difference between the two, an invoice is basically when you anticipate receiving funds from your customer at a later date. And so it will sit out and will go into your accounts receivable. A sales receipt is one where you anticipate, you basically get the funds immediately. So we walked through the process of creating an invoice, receiving the payment, and recording the deposit. That's the steps for an invoice. For a sales receipt, it basically does all of them at once. It does the invoice and the receipt payment all in one step. The purpose or the reason you might want to use a sales receipt is you can just enter a deposit in here and you can put a customer name associated with the deposit. However, because it didn't flow through the accounts receivable module, you cannot pull that transaction up by customer. So you can't look at the customer in here and see that deposit in the transaction list. If you would use a sales receipt, you would be able to see that transaction in your customer, related to your customer. So if we go and look at our customer list here, our customer center, and we pull up Amy's. So all of these transactions that are listed down here, if you would just enter it through a regular deposit, you would not see that deposit listed here. But if you use an invoice or a sales receipt, you would be able to see those transactions associated with that customer. So that would be the benefit of using a sales receipt. So I could see an example of contributions. You know, somebody provides you contributions, you get the money right then and there. You may want to send them a statement down the road of here's all of the donations that you provided to me. Or you want to go back and look and see who actually sent you in donations. You can run a report. You would want to enter it through a sales receipt just to be able to keep track of that by customer if you have no other way that you're keeping track of that information. Just like with the vendors, you can come over here and essentially do the same thing that you could where you entered the bill or the check. You could come over here and enter whatever you need to enter for this individual. So we could create a sales receipt. We wouldn't use estimates, but you can just click next to that customer and then it will pop up the sales receipt for you to enter. There is also an option for entering the invoice. I believe they're calling it the pledge. So when we changed it to tax form 990, it changed the invoice name to a pledge instead of invoice. And so if we choose pledge, it's going to pull up the invoice and we can enter the information for that particular customer just directly from their customer setup. So say we're going to create an invoice. We're going to create an invoice for Dylan. Essentially, anything that you enter on your customer setup will pull forward. So if this individual would have had an address, it would have pulled forward. If we would have set terms up for them, it would have pulled forward. The customer setup really kind of dictates. So what you have in your invoice will pull in, but the customer really dictates your setup on your invoice. Again, your due date is going to flow through to your AR accounts receivable aging report. So it's going to be able to age your invoices or age your receivables based on that due date that you enter. So it either flows off of the terms or you can manually choose a due date. If everyone is going to be due the end of the month, you can just manually change that or add that in on the customer setup. So all of those items that we created are those products and services. So say they're coming and they're attending our QuickBooks class. You can, if we would have put a rate in on the product and service setup, that would have pulled that rate in. So you didn't have to override it each time you got on the invoice. However, we can override any information here, but it's only saved for this invoice. It doesn't go back and change your product and service setup. It doesn't change your customer setup. It's just for this invoice only. And again, we can choose our classes. And And I'm gonna go ahead, if you do have an email address in here, if you hit save and send, it's gonna send that invoice to that individual, to the email address that you have on the customer setup. I'm going to save and close this, and I want to go back into that invoice. I should have saved in. Back to Dylan. I'm gonna go back into this invoice, and what I want to show you is, we talked about how the, we set up what revenue account this item is gonna pull to, in the product and service setup. If we click on this more option and go to transaction journal, it's gonna tell us exactly what accounts this transaction is gonna hit. So it will tell us whatever revenue account that we set up, which is sales of product income, and it's gonna tell us it's the accounts receivable. So those are the two accounts this transaction will hit after it's recorded. So I use this a lot if I'm looking into an invoice that maybe was entered and I'm not sure it was entered correctly. It's not pulling the way I need to. I use that transaction journal a lot to look and see, okay, this item is pulling to this income account. That's where my issue is. I need to now go into the item setup and change that, and change where that item is recorded. You can, and kind of going down that road, and you can go, say you realize, oh, I accidentally set that up wrong, or I didn't change it, and you want to change where that income account is going to. We can click edit, and we can go ahead and change this account. And this option pops up here. So you can either change it and it will change it just going forward. Or if you hit also update historical transactions, it's gonna update every transaction that has used this product and service. So prior year, since this item was created. It is nice though, if it should go, it was going to the wrong place. Essentially, you're just flip-flopping accounts, so it's really not affecting anything that you're doing. It's just affecting the accounts that say it was set up incorrectly. This is just a great way to do that again in one fell swoop without having to go in and manually change or update transactions. So we've created the invoice for Dylan. He's going to kind of attend our QuickBooks class. So we're going to kind of walk through the whole process. So we've created the invoice and now we're going to receive the payment. So if we come in here to the plus new and we're going to receive payment. We're going to pull up Dylan. And we're going to see that he has one invoice or one pledge that's outstanding here. So we'll enter our payment date. If you have QuickBooks payments set up and you choose your payment method, that's what's going to allow you to enter, say, a credit card for an individual. If they provide you with a credit card, you can enter that information here. And we'll kind of talk about QuickBooks payments here in a minute. This is the box that I want you to pay attention to. So deposit right away in one step, which is good if this is the only payment that you have on that deposit that you took to the bank. If you have multiple payments that you received that day from different customers or individuals, and you took them all to the bank on one deposit, undeposited funds is where you want to deposit these transactions to. What that allows you to do is we want the deposit that's in QuickBooks to match exactly what you took to the bank. It's going to make your reconciliation a lot easier. It's going to make sure things tie out easier. That is how you want to record it into QuickBooks. So by recording it to undeposited funds, it essentially sits in a holding area, and then it allows you to choose all of the payments that you took to that bank that day on one deposit. So we're going to go ahead and record this to undeposited funds, and then I'll kind of show you how that works. I have to choose that he paid us, and now we can save it. So now, if we look at the process, we recorded our invoice, we've received our payment, now we need to make our deposit. So if we come in here and we go to bank deposit, we're going to see Dylan his payment sitting here. So anything that's sitting in undeposited funds will be in the select payments included in this deposit section. So say we took all three of these to the bank. As we start clicking these, it changes the amount of the deposit that's being recorded. And so say, oh, this one we didn't actually take, we can just uncheck it and it changes the deposit amount. So you can have payments here and then say there's something that you didn't have an invoice for, you didn't receive a payment for, but you included it on that deposit. We can add another line here. Say somebody gave us $100 cash. It was just an anonymous contribution, so there's nobody to associate it with. You can include this on your deposit, which will add to the deposit amount. So you can do one, you can do all payments, you can do just a deposit, or you can do a combination of both. The ultimate goal is you want this deposit here to match exactly what you took to the bank. So let's save that.
Was that just for manual checks receipt in? Or is that also electronic?
That's electronic. So whether you've received them electronic, whether you received them by check, you would still follow the same process. You have that invoice out there, you have to relieve that invoice somehow. You have to basically associate a payment with that invoice somehow, whether it's ACH, check, anything. So when you're recording the payment, you can just record how you received it. So
that number in the corner for deposit should match your line item for deposits on your bank statement, ideally.
Ideally. So yeah, great point. So you may have checks that you brought in and you actually physically wrote out a deposit slip and took those to the bank. Those probably are going to be, those payments would be separate than say an ACH that came in automatically. Those would, if those come in one at a time, you wouldn't necessarily have to go through undeposited funds. You could record that payment directly to your bank account. Or if there's multiple ones on your ACH, you can still do the same process. So essentially, when you do a sales receipt, you are doing the same thing, except you're doing it all in one transaction. So you can enter your customer name, you can deposit directly to the checking account. So say it's, that's all you took to the bank that day. You can choose your checking account, or you can do undeposited funds and receive multiple at once on the deposit slip that you took to the bank. But it combines those invoice and receive payment in one transaction. Just like accounts payable, there's an accounts receivable aging summary report. And this is what you are going to see on how your invoices are, who still owes you, how old are they, what's the aging on them, and the aging flows off of the due date. Something went wrong. There we go. So here's the pledge, and then you can even drill down even further into seeing this invoice and seeing what was recorded. Just like the accounts payable, kind of the current through 60 days are probably, I typically am not too concerned when it gets to this. When it gets beyond 60 is when I really start to look into it. And then is there some collection efforts that does it need to be resent out? Do we need to just make a quick, hey, reminder phone call? What needs to happen kind of with those 61 and 90 or 91 and over? I also look at that and see if maybe it was the duplicate, maybe it was entered in error. Maybe we shouldn't have invoiced them, or maybe we voided it, but we didn't void it in the system. Those are the kind of things you want to look at when you're looking at those 61 all the way to the 91 and over columns. One thing I wanted to kind of point out here is if you're looking at this report and you have a customer name on here, I really don't have anybody, but this is a parent one, so it's not going to show up, but If you have a customer that's not a sub-account or parent and it has a $0 balance, what that is telling you is that you have an invoice and you have a payment, they just haven't been applied together. So to kind of get them off of this report and kind of keep it clean, you would just need to go in and essentially receive the payment for that customer, and you would see both sides. You would see an invoice and you would see a payment. You would just need to apply those two together, and then it's going to pull off of your AR aging. It's a $0 balance, not a concern, but just in order to keep it a little bit cleaner, I like to go in and make sure those two are applied together. And that will make a difference, you know, on how you run your reports too. So you would like, it is a good practice to make sure they are applied together. So we kind of talked about this a little bit. I hit on it. You can create, so if you have a separate system that maybe keeps track of your contributions or keeps track of your payments, separate point of sale system of some sort, when you come into QuickBooks, you don't necessarily have to enter everything by customer over here because it could be duplicating your information. You're entering it over here by customer or individual. There probably is no need for you to do it over here because you can run reports on this system. Or you have something one-off that you need to take to the bank. So you got a refund for something. It's not normally, there's no invoice associated with it. You can use that bank deposit section and we can enter the information down here and just record this deposit that you took to the bank. So you got a refund. Again, when I mentioned, if we would use, say, Amy's Bird Sanctuary here and we would record a deposit, this will not show up in the customer center or the customer, customer center for Amy's Bird Sanctuary. So you can use it to where if you look back on this deposit, you can see who you received it from. You just would not be able to pull any information from that or see it in your transaction list. It's still an option, still able to be used. And so this could be an instance where if you had a separate system that's keeping track of them, you could put who you received it from, but don't necessarily need to keep track of all of the detail in QuickBooks because you're doing it over in your other system. So now I'm going to talk a little bit about QuickBooks payments. QuickBooks payments essentially are, if you are sending out invoices by email, so essentially you have three options. One, you can send them out by email and they pay you by email. Two, you can get a swiper and you can swipe credit cards. Or three, you can key in your credit card information and basically receive a payment directly through QuickBooks. This is a separate paid additional feature that you can add on to QuickBooks that has an additional charge. And it's pretty comparable to a lot of your credit card companies, but there is different fees associated with how you process those payments. Like if you key it, they charge a higher, I'm not sure why, but 3.4%, maybe because of possible keying errors or something. If you do use the invoice, it's 2.9%. And it's kind of pay as you go. So you don't have a monthly fee associated with it. You just, anytime you use it, anytime somebody pays you, then you'll get charged that fee associated with it. What's really nice about QuickBooks Payments is when you send out your invoice, there's just a link. Somebody can click on it and they can pay you. So if somebody says, hey, I want to take this class, you could send them an invoice. They could click the link to pay it. Because the invoice is associated with the email and it has the link, when they click on it to pay, QuickBooks already knows. So when that payment happens, QuickBooks will basically do all of the recording for you in the actual file. So it will associate the payment with that invoice and it will clear that AR. And then it will be sitting out there waiting to be deposited into your bank, wherever if you, typically that's the only thing that happens with the ACH. So it automatically takes it to a deposit. However, if you had multiple that day, it will combine them all and put them on one deposit then and record that into QuickBooks. So it kind of streamlines the whole process. A lot of times you get your money a little bit quicker too. So it's a great feature that I do have quite a few clients that use it.
Was that similar to the question you guys had on? What we do is we have a RAM and people go on, they sign up and they go in and they do the contributions. They either do it
through RAM, but then we have to print off a report and we have to enter it into QuickBooks as a deposit.
Okay,
And both say that we can do it like just automatically, and we can set it up, but we haven't been able to get it set up
okay.
with we've called and said, hey, can you help me set this up? And they're like, oh, just do this and we'll do that. And it never works.
It never works. Okay.
They really don't talk to each other basically.
Mhm.
Yeah.
So,
Yeah, there are a lot of, with QuickBooks Online, you have a lot of third-party vendors that do say now that they connect with QuickBooks, and they basically will bring over the information so you don't have to do the manual entry from one system to the other. It's a lot of mapping on the back end to
mhm.
make sure that those two are connected and they flow correctly. The biggest thing you want to think about if you do connect another system is what information is it going to bring over?
Right.
Is it going to bring over more information than I need? Is it going to bring over, not enough information? What is it going to look like when it brings it over? Sometimes we'll get into integrations with clients and we'll look at their systems and we'll connect them because it works really well. Other times we'll get in and we'll look at it and we're like, you know what? This is just too much here. I mean, you're going to basically look over here for all of your customer information. Why do you need all of that customer information over here too? And so we then end up not connecting the two and then just record deposits over here and record detailed information over here. So really just kind of looking at what it's going to be bringing over, how to map it. That would be my suggestion, is just really kind of look into that
Mhm.
and see what it's going to do.
Yeah, because you want to make sure you get the information.
Yeah. So if you do have QuickBooks payments set up in your file, and it may not let me because I'm in the sample company, but there will be a payments option here. And when you click on that payments option, there will be a green merchant account up here. If you click on that merchant account, it's going to take you into basically your QuickBooks payment account. Since it's a separate module, it'll take you there. And that's where you'll be able to see all of the transaction level detail associated with anything that's been processed through QuickBooks payments. It will allow you to do refunds through there. It just is going to be anything really associated with your QuickBooks payments. Quick, easy way to get to that merchant services account. Kind of like I said too, if you decide to key them in or you have a swiper when you are receiving payments, what dictates that is the payment method that you choose. So if somebody gives you a Discover card, a box will pop up here that basically allows you to enter the information for that credit card or swipe it. And then you will see a transaction receipt and it will tell you that the transaction is processed. It'll tell you all the information related to that transaction that you processed by credit card. So it's all associated with that payment, if you ever have to go back and look at it. You can also keep customers' and credit card information on file within QuickBooks. So if you have somebody that continually pays you each year or each month, they do the same transaction by credit card, you can keep that information on their file in their customer setup. Just to cover myself, I would always probably create some sort of document saying they're okay that you charge it. You have it on file. You're able to charge it whenever a charge comes up, just so you kind of cover yourself. You're not initiating a payment that they're not wanting you to. But you can store all of that information. If we had it turned on, you could store it all here. And then that way you could just immediately, as you create an invoice or as you create a sales receipt, you can use that saved information to be able to, again, receive a payment. At this point, I think I'm going to have Debbie kind of talk about some accounting concerns related to nonprofits for accounts receivable, and then just things to kind of watch for related to accounts receivable.
Yeah, so accounts receivable is going to be similar to accounts payable as far as watching for cash flow. And the accuracy of the accounts receivable subsidiary, which Vicki had up on there, the aging, the 30, 60, 90 is important for watching the cash flow. I know accuracy is a huge thing. If there's errors in that accounts receivable report, then the statements that you can automatically send from that module out to your customers is going to be incorrect. And I've got a client right now that's their customers are fighting the back and not wanting to pay because they're sending out these statements that are not correct. So that's really important. If there's credits that are entered into accounts receivable, make sure that those are applied to invoices when you pull them up, accurately. And like Vicki said, make sure that if there's payments that have been received, that they're accurately posted against an invoice, so that those two will cancel each other out, so you don't have both kind of floating around in there. One good thing about keeping accounts receivable in the QuickBooks system is that it is automatic. The aging is mostly accurate unless you enter something in there that's incorrect. As opposed to keeping accounts receivable outside of QuickBooks, with just like an Excel spreadsheet or something, and trying to keep track of your billing. That gets a little hairy to do, and then it's not very accurate. It's just really important to keep up on the timeliness of the billing, and the easier you can do that, the better. Because with the cash flow, you want to make sure that that's up to date every month so that you have your income coming in. We've had issues with the chamber itself and billing out and making sure that those are accurate. And if it's not done within the system, it just makes it really hard to track all that separately and then try to make journal entries after the fact to get it caught up. So I'm kind of an advocate of keeping it within the system. But
It's again, letting, kind of what we talked about and kind of a theme all the way through, letting QuickBooks do the work for you. So if you do a little bit of entry and you have it entered in here, QuickBooks is then doing the work for you versus you having to, if you forget to update something on your spreadsheet, if you forget to write something off, do something, QuickBooks is keeping that versus you having to manually update it on your spreadsheet.
it takes a little bit extra time up front to get it all set up and in the system. But it's definitely well worth it. The other thing that this helps you keep track of is if you have people that you think are good customers, but then you look at these lists and you notice that they're not paying. And so that'll get you to act in a timely manner to get them either not buying more services or items before you get too far behind and they're not going to pay for them. And so that you can act accordingly on that. The other thing is your board of directors use the accounts receivable listing as a tool to help manage the organization too. And so they'll look at the detailed listing of the outstanding accounts receivable on a monthly basis. A couple reasons is to look to see if somebody's not paying and if they can help go collect it. But then another thing is if there's customers that start showing up that are not truly customers, and it helps, put up a red flag so that you can look into it a little bit deeper.
Yeah. The biggest thing to think about with accounts receivable is if you're reviewing this report and something isn't accurate, you're essentially reporting revenue. So you could be inflating. So if you're looking to see maybe how a program is, we've set those up as classes and you're seeing how your program is doing. If you have invoices out here that aren't accurate, they're duplicates, they weren't valid, saying, hey, we did this much in revenue when in reality that may be less. So it's really a good idea to look at this report, monitor it, kind of understand everything receiving the payment and then making the deposit. We have some clients that I've seen where they're great about making the invoices. And then they just think, okay, I received the money, now I need to go make a deposit. And they'll just come in here and make a regular deposit and not receive the payment. Well, by doing that, you've essentially duplicated your revenue because you've recorded the invoice, which is recording the revenue. And then when we record it as a deposit, we're also recording that to revenue,
And the aging will be off.
and the aging will be off. Because that invoice will keep sitting out there until you receive a payment. So it's really good to monitor that report on a regular basis just to make sure it's accurate, because then that helps make sure that your revenue is accurate.
When we have a client, and I think you probably know which one because you helped me with it, but, had gotten that mixed up and hadn't been timely applying these payments. And then when it came down to it and tried to match things up and there were errors in there, by the time we got it all reconciled and figured out, I think we had to go back and adjust the previous year by about $100,000, which really threw their revenue off, that their tax return had already been filed, and it was just a mess. So,
Yeah, we'll talk a little bit later about reports and kind of making sure that you're looking at accurate information, but QuickBooks is only good as the information that you put in. So if you want good output, you have to have good information that you're putting in, but then you also have to monitor that information and make sure that it stays good and make sure it's accurate information that is being entered to make sure those reports are going to be good at the end. Anybody have any questions on accounts receivable? Okay, so next we're going to talk about probably one of the biggest benefits that I like about QuickBooks, and that is the bank sync within the QuickBooks file. So what this essentially is you can connect your online banking account, your online checking account to QuickBooks, or your credit card account to QuickBooks. What that does is any transactions that clear your bank account will flow into your QuickBooks file, and you can essentially enter from one screen if you wanted to. It could also make your entry into QuickBooks a lot less, because you could create rules and things could automatically enter it. It just kind of will reduce some of your keystrokes on entering transactions in the QuickBooks. We talked about the credit cards. If you have multiple credit cards, but one statement, you could set up as many credit cards as you want here, and those transactions will sync for that particular credit card, depending on how you connect those two with your online banking on your credit card. What I like about this too is it kind of creates consistency on how you enter. So if you enter your transactions, say you create rules and that's how you enter your transactions, it's going to always record a specific transaction to that account, because that's how you have it set up. So it's not going to be where, okay, I'm going to come in here and enter a check. Today I'm going to enter it into office expenses, but now today I realize, oh, my battery. Yep, there.
oh, it's not turned the switch on.
Oh.
That might be helpful. Sorry, technical. Added board here, and that's what you used. I wonder if it's not. That might put out here. You want to plug this one in while you're down there?
Sure.
That's the one that's running low.
Yeah.
So I just unplugged this one, if that one will work in that one. Yeah. Thanks for pointing that out. Okay, so yeah, it just creates consistency. So say you are entering a check and today you realize, oh, you know what, I think this goes to office expense. But then, you know, a week from now you get the same transaction. You're like, oh, this is probably repairs and maintenance. Well, now you have that same vendor in two different places. By using the bank sync, it could create that consistency, because anytime it sees this detail, it's going to code it to office expense, which is probably really where it needs to be recorded. You can connect pretty much any bank or credit card account. There's two ways that you can connect it, either a direct connect, or you can export and you can import into the QuickBooks file. I would say anymore, I don't know that we have any banks that don't direct connect. There was for a while, some of the smaller ones you couldn't direct connect. You had to do the manual upload, but I think now for the most part, I see a pretty consistent where it's a direct connect. One of the biggest benefits that we're going to talk about here in a minute is your reconciliations. You can complete a reconciliation in minutes.
That's a bonus.
It's a big bonus. So it essentially, the whole purpose of the premise behind the bank sync is saving you time and kind of walking all the way through the process. It will really save you time on those reconciliations. There's sometimes you go in, you put in your ending balance and it's reconciled. It could be that simple in some cases. So if you haven't set up your bank sync, if you're just coming in, you will need to link your accounts. So when you go to link your accounts, it's going to kind of bring you to this page here, and you basically log out to your online banking. So whatever your bank is, you kind of put in their information, and it's going to take you to your login credentials. So then you just log in with your credentials, and then it's going to ask you how far back you want to bring in information. Some banks are fantastic and they'll bring in a year's worth of information. Others only bring in, I think I have one bank that I know for sure that only brings in 90 days. They won't bring in anything prior to that. So if you're doing a big catch up, that bank is hard to work with. But most banks, you can choose how far back you want to bring in information. And so
What bank is that?
it is Enterprise Bank.
Enterprise?
Uh-huh.
Oh, wow.
Yeah, they cap it at 90 days at Enterprise.
Interesting.
Yep. And so you kind of want to think through, most of them, you can choose the date that you bring in your transactions. So say you've entered everything through the month of April, you don't want to re-bring in all of the information from January to April. You just want to bring in from May going forward. So you can choose those dates and it'll only bring in those transactions. So you just kind of want to watch that as you're connecting your account. Then the other thing you want to watch is essentially when you're connecting your online banking to QuickBooks, you're going to choose, so we've already logged into your online banking, then you're going to choose the QuickBooks account that is associated with that. So then when those transactions get recorded, it's recording to the correct account that you have on your chart of accounts and QuickBooks. So you want to watch that as well when you're connecting to.
Like one customer that sends a payment, but it may be for multiple different things. How does it know which account to?
It's the bank account. So it's either that would be more than likely revenue account, or are you talking about somebody sends in a payment and it goes to multiple checking accounts?
Revenue.
Revenue is, you can basically record anything to however many revenue accounts you want. You can break out that payment. When I'm talking about the account here, it's the checking account that's associated with the online banking that you're connecting.
Gotcha. Okay.
Say you happen to be one of the lucky ones and your bank doesn't direct connect. If you click this drop down arrow, you'll have an upload file. And essentially you'll log into your online banking in a separate instance, export the transactions that you want to import, save them as either a .qbo format or a .csv format, save it on your computer. You just drag it and drop it here, and then you hit continue. Again, then you're going to choose the QuickBooks Online bank account or credit card account associated with it, and then it'll pull those transactions in. So a couple more clicks. So once you have everything connected and you have your transactions that are flowing in, you essentially have 3 tabs here. So I'm going to stop and go up here. So anytime, these are the accounts that are connected to the sample company file. So by clicking it and it turning blue, it's going to show all of the transactions associated with that particular account. So if we click checking, we have 25 transactions that are listed here that we need to do something with. We click savings, we have 1 transaction that we need to do something with, MasterCard 7. So this always throws individuals when they're first starting to use the bank sync. Why is my bank balance and my end QuickBooks balance difference? A lot of times they think those need to be exactly the same. Think about it as even on your bank recs. Your bank statement has a balance and your QuickBooks has a balance. The difference, the reason those balances are different are anything that haven't cleared yet. So if you've actually written manual checks and you've recorded them into QuickBooks, That's going to be reflected in your in QuickBooks balance. But since they haven't cleared your bank balance isn't going to reflect those yet. So that's the reason you would have differences between those two balances. It's just the transactions that were entered into QuickBooks but haven't cleared. So most of the time, these are going to be, if you only enter transactions directly from the sink, nothing is outstanding, you don't enter anything in manually, then potentially those two balances would be the same. Here you have essentially 3 tabs that you would work with. The for review, this is basically just a holding area. So these transactions haven't been entered into QuickBooks yet until you do something with them. So that's why that's the for review tab. The categorize tab are going to be any transactions that you've entered through the bank sync. They're going to be listed here, and you can see how they were entered and why they were entered. Excluded, you may realize, say you accidentally brought in all of the transactions for this entire year, but you only should have started in May. You could go in and exclude everything from January to April and not have to worry about those just by check marking them, and then you can exclude, and then they go to the excluded tab. Say you excluded them, you didn't really want to, you can undo them and it's going to put them back out in the for review. So really you're going to be on the for review tab most of the time here. So once these transactions come in, like I said, they're not recorded into QuickBooks until you do something with them. And this action tab is going to kind of tell you what QuickBooks is suggesting to do with the transaction. So we have add, we have view, and we have match. There is also a record transfer, which I'll talk about also. So if it's add is the action, you basically just want to click on the transaction once, and then you're going to want to fill in all of the information. So especially if you're entering, you can enter your checks this way. So you can enter your ACH transactions this way, anything that's coming in. So books by Bessie, say we bought some books for the office. We're going to choose office expenses. The vendor, it may come in on the description that it's books Bessie. However, that is not actually associating it with the vendor. You want the vendor name in this payee column. So then that associates it with a vendor. What that does is if you go look at that vendor, you're going to be able to see the transaction associated with it. Then also if you use 1099s within QuickBooks or even look at your file for 1099s, having that payee there is going to make it easier to run reports and get that information. So once you have everything completed, we can just hit add. And now this transaction is recorded into QuickBooks. So it takes it from this for review tab and records it into QuickBooks. Also, the other thing that it does is on your reconciliation window, it already check marks it because QuickBooks now knows that this has cleared the bank. It's already been reconciled or it's already cleared your bank. So it's going to check mark it for you on that reconciliation window. You also have the option of match. So QuickBooks looks to see if transactions that are being imported in from your bank sync, if they're already entered manually. And so it may find matches. I would always recommend clicking on it and making sure the match is correct. The 2 pieces of information QuickBooks is looking at, date and amount. It's not looking at vendor name. It's not looking at anything else but date and amount. And so anything that is around that date and amount, that's what it's going to be looking for. If you think that matches and it looks good, then you can just hit match. What it's going to do is it's not going to re-enter that transaction, but it's going to connect the transaction that cleared your bank to the manual transaction that you entered. And then it's going to be checkmarked on your reconciliation. You also may have a view action. What this means is QuickBooks has found a couple of transactions that it thinks it could be related to this one that's syncing over. So if we click on it, we can see the 2 it potentially thinks it is. You just choose the best one. So we can see books by Bessie and Pam, and we can see the description says Pam. Again, it's looking at date and amount. It's not realizing that it's Pam. So we want to make sure we check the right one, and then we can now say match. So it's going to try, again, connect the clear transaction with the manual transaction that's already been entered. There is a third action item that usually is sitting out here, but we don't have any in the sample company. It's called record transfer. I can click on it and you can see it here. What this does is it basically allows you, so say you're transferring money from one bank account to another bank account, you can do this as a record transfer. I would recommend not using record transfer because if you enter it and it ends up not being a transfer between bank accounts, say it's a loan payment where you need to break out that loan payment between principal and interest. By entering a record transfer, you're only allowed 2 accounts. The account that is going to, the account that is going from. So if you ever have to go back in and change it, you can't go in and change it. Or if you have to go back in and you realize it shouldn't have gone to a balance sheet account, it should have gone to an expense, you can't do that as well. Record transfer is just between balance sheet accounts. So it gives you a lot less flexibility. QuickBooks tries to be smart and wants you to use it. My recommendation that I always tell my clients, if it says record transfer, don't use it. Click categorize and you're more in control with that transaction.
So like if you're transferring cash from your general account to payroll, is that?
That could be one
example?
instant that you could use it. I would still recommend using the categorize and just using the other bank account. So if we're on the checking account, it's going to savings. I would just manually do it yourself. Because then if it happens to not be that, you can have the flexibility to go in and change it.
Yeah, makes sense.
So one of the other big benefits of kind of creating, actually, I do want to show you one more action item. So QuickBooks is already saying match. So say you use, let's do one we received. So say you do invoicing in QuickBooks and your deposit is coming through on the bank sync. You can click the find match and you can associate that payment with your invoices that match that payment. So you don't even have to do the receive payment feature. You could do it all from the bank sync screen if you wanted to. So again, that can eliminate some of those steps for you and you're doing it all from one screen versus having to receive payment, record your deposit, and then come back in here and match those two. You could just essentially go in here, receive payment and record your deposit all from one screen in one step. And then again, the benefit, it's marked as reconciled or cleared on your bank reconciliation window. The other benefit of the bank sync are rules. And what rules allow you to do, so again, a big benefit is less touches, create efficiencies in your QuickBooks file. So you can create a rule that will automatically enter a transaction for you into QuickBooks, or it will automatically code it for you. You just review it and you click add and that's going to be entered into QuickBooks. So I like rules a lot for anything that is automatically coming out of your bank account that's consistent. So, if you use a payroll service, payroll is going to be one, that's a good one. Utilities are going to be a good one to create rules for. So I'm going to come back here to the banking window and kind of walk you through how I create rules. So what I do is if I see something that is consistent, let's find one here. Let's just do this Chin's Gas and Oil and we'll say it's, oops, I entered it, so that doesn't help. Let's use our Books by Bessie. And I'm gonna just take this off of copy the bank detail. And then I'm gonna go create this rule. So if we go back to banking and go to rules, we're going to create a new rule and we're going to call this Books by Bessie. And it's money out. So any money leaving, if you choose all bank accounts, it will use this rule across all bank and credit card accounts that you have. It may not pick it up on all of them because how each bank brings in the detail may be a little bit different. So you may have to do a rule for each of them. But then we're going to put in the description, it's going to contain the Books by Bessie. We're gonna enter it as an expense. And I'll just do office expenses again. And our payee is Books by Bessie. And you can fill out whatever else you need to. And then I'm gonna turn this auto add toggle off because I want to see how the rule is gonna pick up first. So I'm gonna hit save. And now if I go back into my banking, anything that has the description of Books by Bessie, it should be picking up the rule. It's not because it's trying to do the match. So if we take it to categorize, will it still work for us? No. Let me find one that's not, let's use this A rental instead, because it's not, it's trying to match that one. So if we do A rental, A1 rental, we copy the bank detail. We go back and we're now going to create a rule for this one. Again, it's money out. It contains the A1 rental. Vendor isn't created, so we're going to create this vendor. And then we're going to not do auto add, and now it should pick it up. The setup is worth this, but sometimes it takes a little bit to trick them, and so it's not, first, I'm doing something that's allowing it. A key troubleshooting this is look for, have the show bank details under this gear icon show up, and sometimes that makes a difference. So we're going to try and see what the bank detail now and see if we can get this one to work. Not liking me today. Essentially what will happen is it should tell me here, instead of telling me what category QuickBooks thinks it should, it will pop up here that the rule is applied. And you can then click on that and make sure that the category, the vendor, everything that it brought in based on that rule is correct. If everything is correct, you could then turn that auto add toggle back on. And then anytime that transaction comes through, it won't even show up on the screen. It'll just automatically record it into QuickBooks without having to even touch it. And because it's the same over and over again, you don't even have to worry about that. Creates that consistency that we talked about, that it's always going to be recorded at the same place, but then also save you keystrokes along the way. So it is, again, it's a little bit of an investment in time up front creating those rules. However, anything that is consistent like that, in that you don't have to touch, it's a great way to kind of save time, and a great benefit of QuickBooks Online. So kind of some common issues that I see with using the bank sync is that people will come in here and they'll just start, whatever QuickBooks is saying, they'll just start adding, and they'll just start going down through without reviewing them. This is kind of, like I mentioned, is a holding area, but you want to control and you know exactly where it's being recorded. Because if you just start hitting match or you start hitting add and it's not connected correctly, it's again going to make your recording not accurate on the back end. So you want to make sure you're reviewing these transactions, but that's one big common thing that I see. The other thing is QuickBooks really does try to be smarter than it is. And so it may come in here and tell you, hey, this is uncategorized expense. Well, we know uncategorized expense isn't where we want Hicks hardware. So you want to be watching and making sure that the accounts that are being recorded really make sense for the transaction that's syncing through. The other thing, as I mentioned before, and I see this a lot, because this description has the payee name, or the bank detail has the payee name, it's missed over here. And that is one thing you want to make sure that if you're paying somebody, if it's money out, you want something in this payee name always.
And the way to, you just hit
Go ahead and edit.
the action.
Yeah, you just click on it and then you
Oh, okay.
can, if we go to categories, then you can add the vendor name. There are several files, several clients, no matter how many times we tell them, they don't want to put in the payee name for whatever reason, because they see it here. But if we're, from the accounting standpoint, if we're reviewing reports, we're seeing where transactions are coded, that vendor tells us a lot. If we're reviewing an account and there's Hicks hardware in payroll, we know that that isn't valid and we probably need to move that to some other account. And so vendor names do play a big part in making sure your information is accurate. But then again, also for 1099 reporting, it makes it's very beneficial to have a payee. So even though this is helping save keystrokes, you want to make sure you still have all the key information in there as recorded. So I probably said this more than I should, but the biggest benefit of the bank sync is a bank reconciliation. So if we come in and we're ready to reconcile our bank, and we come in here and we're going to reconcile this bank statement. Say we now have $10,000, reconciling it through May. You essentially, if we look down through anything that we entered through the bank sync, already has the check mark, like I mentioned. And it has this little green box, which lets you know it's a sync transaction. So again, you may come in here, if everything is entered through that bank sync, you may come in here, enter your ending balance, and your difference is 0 and you're reconciled for the month. Reconciliations are truly important because they make sure that any income that has come through your bank account, any expenses that have come through, you have everything recorded. So reconciling to your bank, reconciling to your credit card just ensures that you have everything recorded. It also tells you a lot. So say you start using the bank sync, but you have you entered it manually and the transaction didn't match for whatever reason, and you entered it manually and then you also entered it through the bank sync, you have those transactions duplicated. You would be able to see this on your reconciliation window and be able to look at those and make sure, okay, they didn't match up. I need to, for whatever reason, maybe you had the wrong vendor, you had the wrong date, something, they didn't match up. Now I know, okay, I can delete this transaction because otherwise my expenses are doubled up. So your reconciliation window tells you a lot, which is why you want to keep it current. I recommend monthly, as soon as you get your statement, a few days afterwards, make sure it's reconciled. So then it's not a big daunting task to try to do multiple months at once.
Yeah, we just did an audit 6 months ago that they were 2 years behind in reconciling the banks, and it was on QuickBooks. But they were not reconciling through QuickBooks. They were doing it manually on an Excel spreadsheet. And then so their new person that came in had gone in and did the reconciliation feature to get it caught up, but it was 2 years behind. And when they went in there to make the thing reconcile, they ended up putting hundreds of thousands of dollars in as corrections to the revenue and all kinds of things. So, and it was a nonprofit.
Wow. It is probably the key thing that I tell all of my clients. And for whatever reason, it's one that gets pushed off to the side. I'm busy, I can't do it. I've entered everything I know I have. How many times, time and time again, you get in and you help them get caught up and there's several transactions that are missed. So it is probably the one thing that I tell clients. They probably get tired of me talking to them about it, but it is probably one of the most important things. If you are reconciling and you do a combination of manual and you do a combination of the bank sync, then you can just come in here and check whatever is on your bank statement. You never enter that beginning balance. So, but you still want to make sure it's accurate. If something has been deleted that's already been reconciled, it's going to throw off your balance. Something's been changed that's already been reconciled, it's going to throw off your beginning balance. So that is one area you want to check. You want to check to make sure you enter the ending balance correctly and it matches your statement. this is to me is the biggest troubleshooting area right here, is your payments and your deposits. As you click, these amounts go up. So everything that you've check marked, it will total your payments, it will total your deposits. So if you're off and your reconciliation doesn't have a $0 difference, this is the first place that I look. And I look to see, okay, where is it off? If I look on my bank statement, it gives me totals. Is it on my payment side or is it on my deposit side? And then I start troubleshooting from there. And you basically can say you realize it's on your payment side, you can click the payments tab and it's only going to show you payments. So then that way you can start looking at this and really comparing them to your bank statement and make sure you know where your difference is. The other thing that's helpful is any of these columns you can click and it's going to sort. So if you're off, say $25 or $23.50, it's never off an exact amount, exact transaction. But if you are, if you click this, maybe you didn't see it in the list of the date, but you see it here on the amount. Okay, I can click it. Now I'm reconciled. My difference is 0. So clicking on any of these columns will sort them however you need to in a better way, easier way for you to kind of help troubleshoot and find your difference.
So if it's something that wasn't entered into your QuickBooks, like a service charge on the bank that didn't come through, you just manually add that in there?
Yep, you would just go in here and add it as an expense or as a check, or you can edit the info. If it's not a synced bank account, you can manually enter the service charge fee here. If it's synced, you won't have that option. But if it was missed somehow, you can easily just go back in here on the expenditures and enter that.
I was thinking that when it came up, that it asked you if there were service charges. So when it asked you the ending balance, and then it asked you if were there any service charges. I thought, but I can't remember.
So let me choose the savings. If it's a bank account that you have synced with QuickBooks, it doesn't give you that option to manually enter it. If it's one that you don't have connected, you will have the option and you can manually enter your service charges or your interest down below when you start your reconciliation.
But if it's synced, then it's just assuming that it's not wrong, and so it's transferred everything.
Yep, it's assuming that it came over through the bank sync
Okay.
and that it's being recorded. With your reconciliations also, you want to make sure you do not click reconcile now. You can do the drop down and click finish now if you want, but if you have a difference here and it's not 0, QuickBooks creates this lovely little account called reconciliation discrepancies. And basically it forces your bank to reconcile. But what that does is, depending if you're off on the payment side or if you're off on the deposit side, it's creating revenue, it's creating expense, depending on which way it goes. So really you want to get in the habit of not clicking reconcile now until you find your difference, and your difference is 0.
I like that you can get out of it and come back. You know, you don't have to do it all right then.
Yeah.
Yeah. I mean, something comes up, you know.
Yep. I didn't even hit save for later, but if I go somewhere else and I come back in, it's automatically going to be saved. So any changes that I did, it's just resume reconciling. And I'm ready to go again.
Okay.
One other thing I want to show you on reconciliations is you have these 2 options here, summary and history by account. I use history by account a lot. This is going to show you so if you're familiar with the desktop version, when you would reconcile, it would allow you to print a reconciliation report right there. In QuickBooks Online, it does not give you the option to print that report. But if you go in here to history by account, you can see any of the reconciliations that you've done in the online file and print those reconciliation reports. So if you ever need to go back and wonder, hey, what's going on? I need this for an audit purpose, audit reason, you can easily go back in here and reprint those reports. Since this is a sample, it looks like it's not going to show me that information, but you can do that for checking and savings. And again, you want to make sure you're reconciling your credit card accounts. So that would be another one that would be listed here that you could go back and reprint those reports for. If by chance, so we talked about if your beginning balance basically pulls from the ending balance of the previous month. So you don't ever get the opportunity to go in and change that. If by chance you come in here and that beginning balance is off, you will see a little section here that will say, hey, your beginning balance or your balance is off. Here, let's help you buy this amount. Here, let's help you fix it. If you click on that, let's help me fix it. It will list all of the transactions that were deleted or changed since the prior reconciliation. And then you can go in and adjust those and fix those back to the way they were. And then you're back in balance. But that's another benefit that I like about QuickBooks Online is it kind of tells you and it gives you a report right there. Whereas the desktop, you kind of had to search a little bit more and figure out what was going on or what changed. So it's another big benefit. Hopefully those doesn't happen very often, but sometimes people don't realize or they don't see those warnings that say, hey, this has been reconciled. They just kind of click through those warnings and it does create those changes. So I think at this point I left some time for some questions. I know we're kind of right at lunch. Is lunch here? Do you know?
I'll go check.
Okay.
I haven't heard anything. That's good.
Lunch is not here yet, but it should be here any minute.
There you go.
Well,
So I did leave some time here. Does anybody have any questions? It doesn't have to be related to anything we've talked about so far, but any questions related to QuickBooks in general?
Or if there's anything you want to make sure that we cover
Cover,
during
yeah.
the rest of the time.
I'm just glad we don't do our own reconciliation or whatever.
Yeah, exactly.
Yeah. But to me, the duplicating is more in the credit card deal, because a lot of times we have to get everything approved, before we continue. And you'll enter it, and then the bank come in and you didn't watch what you were doing, so it's entered twice. And if it doesn't have the little green folder, I have found out if it doesn't have a little green folder there, then it's probably a duplicate. So you go in and check, and if it's the same way on the checking. If the little green folder is not there, then it didn't. Yeah.
If the little green folder is not there, it didn't go through the bank sync.
Okay.
And it was entered, it's a manual transaction that's sitting on your reconciliation
So you
window.
need to go in and check it, make sure it's not a double.
Yeah,
entry.
if you're entering everything through the bank sync, then yes, that is the biggest cue for you that, okay, maybe this is a duplicate because I should be entering everything through that bank sync.
Right, and the other one is the credit card too. It does the same thing. So
Mhm.
I enter it and then I go back and wait a minute.
Yeah. So the credit card is credit card receipts, right?
Yeah,
Sales on your credit cards.
yeah, your charges on your credit card. Mhm.
And so the credit card charges, how are those handled when they're?
So if they're coming through the bank sync, it's gonna be the same way. So we have, here's the credit card that you have connected. So all of the credit card charges that happen on your credit card, just say we go out to eat or you buy books for the office or whatever you need to do, those credit card charges are gonna be listed here. And you just enter them like a normal transaction. And because it's the credit card here, we have connected this credit card to the credit card account that's in QuickBooks. So all of these charges will hit the credit card account, increasing the balance, and then be recorded to whatever expense account we choose for them to be recorded to.
So if you have sales and then people are paying with their card, but then let's say you have a fee that they charge on all sales, how does that match up with what's being recorded in the?
So your sales probably all come through your checking account. So even if the customer is paying you by credit card, then that's all going to go through on your checking account as income coming in. We won't have a credit card set up for that.
So how do you reconcile a credit card statement on that side of it?
So this is a credit card so when we're talking about this credit card, we're talking about the credit card that you use. So just like in our office, we use Divvy and we get a credit card statement from Divvy.
Right, and
Yeah. And so that's the statement that you're reconciling here. If you're wanting to reconcile anything that came through a credit card that you took as a payment as a credit card, That won't happen through this reconciliation window. That would have to be done somewhere different if you're reconciling that.
That's why I was curious, because there we have several clients that have that, like they'll sign up under a processor. And then it'll come through and then they take 3-4%, I'm sorry, off the top. But then the sales amount is 100% of the charge, but then the net amount comes through because of the fee that's taken off.
Mhm. So what you could do for that, so say if we're looking at this transaction and we received it from Amazon, we could come in here and we could do a split on this transaction. And we could do sales of product income. And let's say they gave us $100. And then we could do bank fees or credit card fees, whatever you have set up. And then we could do.
Oh, yeah, girl. Give me a survey.
So there's our fees. And then we match the deposit that came in. Because it's $89.99. And then here's how we're recording those charges. And then we're getting the revenue
Okay,
of the right amount.
so that's still helpful because you have every transaction in there. You just have to go in there and manually split it. But you could set up a bank account as a credit card, like this is the Discover Bank, basically.
Not for receiving. So anything receiving, it'll just be under the checking account. If you're wanting to reconcile that out, what I typically try to tell clients, if they have a credit card company, try not to have them take it out a transaction fee by transaction, have a monthly fee that they do.
Yes,
Because that
Much
just
easier.
makes it so much easier.
yeah,
But if they can't get it set up that way, it's gonna be a little bit more of a manual process, because once that deposit comes in, they're gonna have to manually change and adjust it, and then more than likely print something from that credit card. So
the
you
other
can tie
key
it out.
is the cutoff
Mhm.
is the same, like the month end or whatever, because all those transactions are going through the bank.
Yep,
But yet, if the credit card company cuts off differently.
yeah, you'll need to make sure you get them entered. Yep. Yep.
Can you, on the bank register, I know on the credit card, if you want to go in and make sure that all your lines are filled in, all the information, like sometimes if you go in like on a credit card one like this one, and they won't have like it was a credit card or is ordered online or, that type of thing. So you go to the bank register, well, is that what it says on the credit card? And you can go and then go click on your, up there in the blue right above to the right, it says take a tour or go
Oh,
to
yeah.
the bank. You click on bank register and it brings everything up and you can go in and click there and add more information. Right?
Yeah, you
Yeah,
can do that.
Because you can fill in your blanks there that you normally have things in, where you can't do it the other way. When you click on it in the other,
You should be able to click on it once and it should have almost the same exact information.
well, you
that-
can't enter the credit card or online ordering. You have to go in the other way. I think, I'm pretty sure.
Lunch is here.
Okay,
Okay. Do you use the memo? Is that where you enter that or?
Yes,
Okay.
yeah. And then also we have a line up at the top. It says, how did you do this? And it's either you did it with, they went to a town to the store and purchased it with a credit card, or they did online order or auto pay or. And so you go into that bank register and do it, and you have more options to fill in the blanks, it seems to me. See, like there, see, because we have some more lines. We have credit card, if you use the credit card, if it's auto pay, or if you ordered online, or anyway.
Yeah, and that could just be, so if we click the gear, not here, somewhere it'll tell you, you can open up the options of what you see here based on the options that you have turned on. And so you could have another option turned on that has that additional field.
Okay.
Yeah. I thought though, everything you should be able to do directly from here, because it
If you
essentially,
clicked on that, in ours you can't, because see, it doesn't show you that you can put in that it was a credit card or an online purchase or.
yeah.
So usually what I do, I just go up there and do it to the bike thing.
I'm guessing that there's, you have a feature turned on which adds that column. And then I would,
It was already set up, so, you know, they're just,
Lunch is ready.
Okay, Cindy.
like I said, but it's fine. I mean, I don't mind. It was-
yeah. The purpose of the bank sync is so that you can really enter from one screen. So I would find, I'm not doubting you, I'm just finding it hard to believe that they wouldn't have it here if they have it there, because that's the intended purpose. I know what you're talking about. I've seen it, but I think it has to be a feature that I turn on to be able to see it here, but I'm not sure what feature that would be to turn on.
Well, and I don't know if it matters, but we usually enter from, we go to new and then we enter an expense or
check.
check. That's usually how we put our stuff in.
Yeah, we go through.
So there, it looks like that.
See right
There
there.
it is.
Payment
Payment
method.
method.
Payment method you can use either online payment, credit card, you know, and then,
And my guess is it probably is, does it give us that option on the checking? A credit card, it probably isn't going to give us that option because it knows it's a credit card.
Mhm.
So if you have a payment method of online versus you went into the store to purchase, they're just looking at it as you used your credit card as your payment method. Let's see if checking has it.
sorry.
No,
Anyways,
it's
just
not here.
another way they said that you could, well, I was just talking, another way you can go in and, because there's more than one way to get there, right? So,
Yeah.
Yeah. Goodness.
yeah. Kind of learn one way, you just go that way, right?
It surprises me that it's not there just because the intended purpose, like I said, is to make sure that everything is, you can enter from one
Duplicate.
screen. Yeah. So,
Okay.
Well, what time should we reconvene for the people online?
let's come back about 12:30.
12:30?
Give a little bit of time to eat and kind of just visit and then.
Good.
I'll go ahead and
Be back.
close off the recording.
Yeah, I'm fine with that.
Button.
Send again, so it doesn't yell at us.
Okay, so this afternoon, kind of on the docket that we'll kind of talk about, just to kind of go a high level overview here, we're gonna start with budgets. We'll kind of talk through budgets and then we'll talk through reports. So all of the stuff we've been talking about, how you get it set up to get the end result of the reports, we're gonna kind of talk through reports and what that looks like. We'll talk through some payroll items as well. And then I always like to end on the QuickBooks side with just providing a bunch of tips and tricks on how to use QuickBooks. Maybe just some ideas you didn't know on how to use QuickBooks a little bit more efficiently and just ways to kind of get to different things easier. And then Debbie's going to kind of end our session today with kind of some nonprofit industry trends. So she'll kind of talk through that as well. Just some different things that are related to nonprofits right now.
Yeah.
Going on, and then we'll have some time for questions. So again, just like the beginning, if you have any questions, just ask it as we go along, and we'll kind of answer them. And we'll take a break probably around 1:30, 1:45, somewhere around in there. We'll take another quick break and then we'll keep going. Okay, so we are going to talk about budgets. So we've talked a lot about the different versions and options that are available in those versions. Budgets are one of those things that are available in the plus and the advanced versions of QuickBooks. So if you have those options, you have the capability of creating a budget. Kind of some setup items that are good to make sure you have going before you start your budgets or start creating budgets. One is the year that we talked about. So confirming what your year is. So if your fiscal year end, you know, making sure the first month of your year is correct, that's going to be key to creating your budgets. The next thing is, you know, you can start a budget at any time in QuickBooks. So if you're starting midway through the year, you at least need a budget. You can start midway through the year. Beginning of the year is always the ideal optimal time. However, you can start it at any time. You can create a budget by pulling in either current year information, so what's happened so far this year, or you can create it off of prior year information. So it will bring in prior year numbers, and then you can adjust those as you need to create your budget. You can adjust or make changes to any existing budget that you have. So say you get, partway through the year and you add another program, you add something else that's going to increase your revenue, you want to adjust your budget accordingly, you can adjust any budget that you create in QuickBooks. You can also copy any budget. So if you are pretty consistent on how your budget is year after year, you can copy the previous year to the current year and just make adjustments for that current year on your budget as well in QuickBooks. And kind of like we talked about earlier, you can create a budget either using parent accounts or you can create it using all of your sub accounts. So depending on how detailed you want your budget to be, do either option. And if you do on the parent accounts, when we go in to look at the reports, you can collapse those reports. So then you only see those parent amounts when you're looking at those budget reports. And then all of the actual expenses will flow up into that parent account when you collapse it. Also, you have different frequencies that you can create your budget on. You can create a monthly budget, you can create a quarterly budget, or you can create an annual budget in QuickBooks. So whatever is more beneficial for your organization, you have those three options as far as frequency is concerned.
On the annual, will it allocate year to date when you're comparing like this?
No, it'll just be I believe we can look at one, but I believe it just does, this is what your annual budget is. And then you will do whatever. So year to date, as far as actual expenses, it will, but then it'll say, this is how much is the total amount of the budget remaining. That makes sense. So it won't do the annual budget and create that year to date. So say you're looking at 5 months, it won't take your annual and only look at 5 months. It'll take your actual expenses for 5 months against your total annual budget, and then it'll tell you how much is remaining.
Gotcha.
Okay, so to use the budget feature in QuickBooks, it's under the tools section of your gear icon, and there's a budgeting option. And then if we're wanting to create a new one, we can just add a budget. And so if we do create one for 2022, you choose, so that's the name of your budget, and then you choose what period or what fiscal year you're running your budget for or creating it for. And then here's where it tells you your frequency. So your monthly, your quarterly, or your yearly. So we're going to just keep it on quarterly. And then when we talk about actual data, we could pre-fill it with our actual data for 2021. When we create the budget, it'll pull in. And then you can also subdivide your budget. So if you have classes, you can subdivide your budget into classes. You can do a bunch of different things with the subdivide, making it, if you have a budget for a program, you could do a separate budget for your programs, different things like that. You can subdivide it. So once we hit create budget, because we're pulling in actual data from 2021, when we click create, it didn't pull it in. I'm going to use 2022 because I'm guessing there's no data really in for 2021 in the sample company. That's why it's not there. So when we create the budget, we can see that it pulled in actual data that we've entered for 2022 right now. So if we would use 2021, we're using the prior year to use to build our budget, then it will pull in the actual numbers, and then you can just adjust how you need to accordingly. So when we talk about the sub accounts and the parent accounts, we can see here that if we close this up, so if we close each of these items up and click the black arrow here, it'll expand them out so we can do the parent account or the sub accounts. Or if we close it up, we can just do the parent account. And then if, say, landscaping is $190, or we know that we're going to spend however much in landscaping and we want to adjust it all year, we're going to spend, say, $1,200. So we're only going to do $100 for each month of landscaping. You can just come in here. And then we can just copy it and it'll copy all the way through.
Could you not put the total and then would it not populate it that way through the 12 months? You know what I'm saying? Just put a total at the end and later populate it.
The total is not something you can put in at the end, but
Okay.
what you can do, I don't know if you saw that there, but if we put $100 here,
Yeah, I saw that.
and then if we hit copy, it's going to copy it all the way through.
Okay, but that's what I'm saying. You have to do it at the first of the month and then it'll,
Yes.
and then
it'll
it
copy
changes the
through.
total, but you can't go to the total and let it try and populate the others.
No,
Okay.
no, it doesn't do the total.
So if you know that you have a cyclical operations, or, you know, you have a fundraising event in October, can you populate those?
Yeah,
based on
so you
that?
can put a different number in every field.
Because that's important when we're looking at a monthly financial statements comparison to budget.
Mhm. Yeah, so you can adjust these and put in whatever number you want. So if it is cyclical like that, it's not the same and it's not consistent all the way through the year, you could have it copy all the way through and it's the same amount, or you can adjust those numbers so it matches whatever your cyclical revenue is or your cyclical expenses are
Okay.
throughout the year. And so, yeah, you can see here, like here we have this broken down into sub accounts. So you could take every single one of these and create a budget item for. I don't know, budget wise, is it better to do parent? Is it better to do detail? What's kind of the norm that you see?
For a board that probably isn't real financially, you know, savvy, probably just to do it at the higher level instead of to keep people from getting too much into the weeds, because then they are too worried about that instead of the overall categories.
Yeah, so you just continue to come in here and fill out your budget information. I do believe, and I meant to check this before I believe you can import or bring in, at least copy and paste from an Excel. So if you have it on an Excel document, there's a way that you can bring that in here, I do believe. If somebody wants that option or wants to information on that option, just email me and I'll look into that for you. I meant to look that up. So once you have everything filled out like you want on your budget, then you just click save. And it's going to save the budget.
Well, that's easy. Especially when it's already all set up, you know, you just go in.
Yeah. Yeah, so it's nice that you can bring in the actual data, because then that gives you the cyclical trends that you have. And then a lot of times, you know, the budgets that I've seen, people take that and they change those to whole numbers just because it's, you know, the actual expenses typically have, they're not rounded. So they bring those in. So now when we look out here, we can see that I've actually created two budgets, one that doesn't have information and the one that does. And so you have action items related to the budgets that you create in QuickBooks. So if you come over here, we talked about copying the budget. So say your organization is pretty much the same year after year, and your budget doesn't change a whole lot. You can copy the budget from one year and create the new budget for the new year and just make any adjustments that you need to make for that new year's budget. So making it easier so you don't have to completely go through and create everything year after year. You can kind of use what's already in QuickBooks to create that budget. So if we want to say we're working on 2023 budget, we can make our changes and then create a budget. And then now we have our 2023 budget out here. The other action items you have, you can delete a budget. I don't like to delete. I'm not a big advocate of deleting really anything in QuickBooks, just because you never know what else it affects, whatever else it could be a part of. So I just typically leave the budgets out here, but if you do created one in error, you have the option to delete. You then also have the option to run the 2 reports that are associated with budgets in QuickBooks right from this budget window. So it makes it really nice. In that respect. So if we go and say we're going to, I need to make sure I choose the right one, excuse me, with data. If we choose this 2022 one, and we go ahead and run reports, let's go ahead and run this budget versus actual report. So you have the option here of choosing, if we're doing year to date, so if we're only going to do through April 30th, we have the option to choose that. We choose the budget we're associating it with, which we chose directly from, pull the report directly from that budget, so we know that's right. Then you have options of comparing the budget. So you can change the columns and what it's showing you. So you have the option of choosing whether you're over budget or dollar remaining, or percentage of budget and percentage remaining. And you don't have to have, you can do one, you can do multiple. It's just going to expand out your report on the options that you choose. So say we want to know dollar remaining and percentage of budget that was used. We just mark that and we can click run report. And now that's the columns that we have listed here on this report. So here's the amount of budget remaining, which we have a budget. We have no actual cost, so we have $100 remaining in January. And then February and March and so on. And then there should be a total at the end. And you can see where everything is actual total for this point in time. And because we did a monthly, that's how we're able to get those as monthly figures versus just an annual figure into QuickBooks. The other thing I guess you want to watch on here too is whether you are running your books on cash or accrual, because that will make a difference on how the information pulls in, like your revenue and your expenses. So you want to make sure your accounting method is set up correctly when you're running this budget report. And we're going to go back to our budgets, and then we're going to run the other report that's out here. And I'm going to edit our budget. We're going to run the budget overview report. And this is just a report so you can see the actual budget. So these are budgeted items. So this is how the budget that you've entered into QuickBooks, this is what it is. So it's not going to show you any actual expenses. If you need just a document that says, here's our budget, so you can look at it, make sure everything looks in line, make sure everything's correct on a report, this would be the report that you would want to use as this budget overview report.
So we've, Cindy. Is Cindy there? Did you hear me?
Still muted.
You're muted.
Okay, I'm unmuted.
Okay. Hey, question on the nonprofit chamber budget. Is ours entered in there by month, or is it? Do you know?
So when I go in and enter the budget, I enter it for the year and it breaks it up by month.
So it allocates it the same percentage for each month?
Yes.
Okay,
And
then
if I
that-
want to go in there and make changes by the month, I could certainly do that. So for instance, if I had my gas bill in there, that's automatically going to be a lot higher in the winter and lower than the summer, I could go in and make those adjustments.
Okay, so that probably answers some of the questions that I sent you about the variance in the budget and actual.
Yep. It's just easier to go in and put it in and let it split it up month by month and then go back and make those adjustments.
Yeah, because when we have our conference and some of those things, that would make those months.
Yep.
Make a little bit more sense on our budget.
Yes.
So you, Cindy, so you enter an annual budget and it breaks it out, and then how do you go in and adjust then the monthly, or do you do a monthly budget?
No.
No, I just do it, I just do it annual and I can go back in and make those changes by the month. So I can change the view to a monthly view. And I can go edit those months.
Okay.
Yeah. like agency budget.
Mm.
This is the budget.
So if we go, so I'm gonna test with this for just a second. So if we create an annual budget,
This is actually a fairly common thing that comes up on a lot of several boards.
so I'd be interested, Cindy, maybe I can get with you, but because I created this annual budget and then now I don't have a way to take this as to monthly because I didn't think you could do that. So I'd be curious to see. I knew you created once you created your budget, you created it on your frequency and that's the frequency that it stayed. And then when you edit it, you can just edit the numbers, but you're not able to edit the frequency. Unless we do this, view by month. There we go.
So does that look right, Cindy?
Yeah, I think so. I'd have to go in, yes.
Okay, so this gear icon is on a lot of screens, and I just learned something new today too. So you can create an annual budget, but if you want to see it by month or you need to adjust something by month because of some changes, you can use this gear icon and choose how you want to view your budget, and then you're able to go in and change the numbers, which will then change your annual overall budget. This gear icon is on a lot of different screens and it just gives you more options. So there's a gear icon, the main gear icon, which is settings for the overall company. And then you also have smaller gear icons here that are per individual, whatever transaction you're in or whatever you're entering, you have the gear icon to make changes. I always tell everyone, I feel like I know a lot about QuickBooks, but I still feel like I learn stuff every day. So that was something that I just learned today.
There's a lot.
So really kind of creating the budget and entering the budget is really kind of pretty simple, especially if you pre-fill data. And then you really only have ultimately those two reports to kind of run, which are really the main ones that you want to run anyway. So it's an easy feature of QuickBooks, but it's one that you kind of have to stay up on to make sure it's accurate, to make sure it's current, kind of like everything else. So if you create it, if there are any changes, you always want to go in and be able to adjust those to make sure you're staying on budget, to make sure you're staying on track. But it is pretty simple to create it essentially though in QuickBooks. So I think Debbie is going to talk a little bit about some things to think about when you're creating your budget.
Now that I have a piece of candy in my mouth. So, what we've run into before is, and I serve on several different boards as well. But I think we talked about this earlier, that the budget line items should match up with the trial balance that we created. So it's easy to monitor each of our line items that we need to run the organization. And then you want to keep it simple, but you want to keep as much detail as you need to run the organization. So I know in several places we've had discussions, what accounts are best to keep track of, and then make sure that the detail includes that in our budget so that that information is provided. And then when you're creating the actual numbers, this really doesn't have anything to do with QuickBooks, but when you're entering the numbers in, you want to make sure that the amounts are reasonable when you're projecting it for the year, because if you plug something in, if you're really optimistic about the year that's coming up and you make the income look really good and all of this stuff's gonna happen. It just really frustrates, it can frustrate yourself and the organization and the board if that was not realistic and you get into the year and then it's, just falling apart, and then you kind of have to take a look at redoing the budget to resetting it. So you want to make sure it's realistic. And then also that if you're looking at, let's just say, well, like here, like membership revenue. And so if you're projecting what that is going to be for the year, you want to make sure that any other account that's associated with that revenue, so all the expense accounts that may go up or down related to how many members we had, that those projected numbers correlate with the increase or decrease that you're doing for the revenue. So that everything is systematic and it doesn't get off on one side or the other. So if somebody's projecting that we're going to have 100 new members, but yet we don't have an increase in, say advertising or something that goes with the membership, then that should be a red flag that we're not really budgeting correctly. And then the thing about this budgeting feature is that it helps management kind of track everything to make sure everything is staying on track. And that if it's timely and everything's accurate, then it can stop you on a timely basis to get things righted, to get everything back on track before it goes too far off down the track. But those are the things that we kind of work with on the budgeting.
Okay. I wanted to test something out here, if you guys don't mind. So when Cindy was talking about that she does the annual budget, I want to see, so kind of what you were talking about is, can you enter a total and how does it spread it across? If it spreads it across, I want to see if we enter the annual budget, what it does monthly. So if we go in and we edit this here, and let's just start changing some of our numbers here. Let's see what it does and how it breaks it out monthly. When we turn that, we're going to save this. And then if we change this to a monthly view, does it spread that out or does it? No. This is kind of what I was wondering. It keeps it in the month that the original expense happened.
Oh, interesting.
Yeah, so it doesn't break it out
Doesn't break it out.
by
into-
month. Yeah, I was wondering if maybe.
Yeah, what I was talking about, just put the
Yeah.
total in and
Yeah.
and then it spread it out for you in the month.
That's what I was maybe hoping it did, if we did an annual, and then you could easily kind of then just kind of
Yeah.
back into it.
Mhm.
But it looks like because we broke this up off of actual expenses, it looks like it's doing it in the month of the actual expense that it happened.
Okay.
Hmm.
So there you go.
I was hoping we
No,
could trick it
can't
for
do
you.
that. You can't do that. No.
Yep, I was hoping we could trick it for you.
That's
but-
what we need to do, is tell her to work on that. Just put the annual amount in and then let it spread out for the whole.
Get the
That's
money
right.
flowing right
For the
now.
12 months. Hey, they said they're trying to make a shortcut, so.
That's a user request.
Yeah, so the budget feature is really nice in QuickBooks, but again, you got to maintain it, you got to be watching it, you got to be addressing it as you go along in order for it to be helpful and beneficial to you and the board on how you're entering that information. So if there are changes, if there's different things, you need to be adjusting that budget accordingly. Otherwise, it's not going to be accurate and it's not going to provide the information that you need.
A good example is during 2020 with COVID. Now, I'm on the board of the YMCA. And as you know, it closed down for a couple of months. And so we had to totally revisit the whole budget and redo it. But I mean, that's in our best interest because you're going to be operating completely different from that point on through the year. But at least with this, it'll allow you to redo that and reset it.
And where we're at, I don't think we changed the budget. I mean, we have a set amount. I mean, we can go in if they spend too much money, like use. And they can maybe, if it's been approved, but the church votes on it, it's pretty much, that's.
Yes, and that's a lot of places that once the budget's set, it's
That's
set.
it, yeah.
And so then you have, every month when you're going over the budget, you have this list of,
Yes, but one
why it's
month you may
different.
not do anything, and the next month you might, you have several months that you're not hardly spend anything out of that line, but the next, and then after that, you may spend a lot. So, yeah, it looks very strong.
matters as to whether you have to shift operationally as to if you want to redo your budget so that the organization is completely changing the way it's operating. Church, most of the time is just operating pretty standard, but yeah, but depending on the organizational documents or agreements, whether or not you can change that budget, that's factor.
I think if you change the budget, you have to go for the church, don't you?
Yeah, we
You have to get a vote.
And then they usually move it from general
Yeah, over to
to
the,
cover.
but that very rarely do the.
Yeah.
The why I actually had to do that too. I had to have, well, that just had to have the whole board approve it.
Yeah, but yeah, this is like everybody, church members.
Otherwise, people will be changing the budget as throughout the year, and you don't want that to happen.
Yeah, so that's a great point that, check with your board, check with your bylaws, I'm sure is what dictates that on what you can and can't do. Again, you just want to make sure the information is accurate and what you're reporting is good information. So however you need to adjust that or whatever you need to do to be able to do that. And what's nice too is so a lot of times when you're getting to the end of the year, you're starting to work on the budget for the next year. So you can start doing and then budget for next year at any point in time and start creating that in here, copy the old one, start creating it at any time. So then that way, when the new year hits, you're ready to even start that budget too. So it just allows you to create whatever you need to as you move along in QuickBooks. Okay, so now we've kind of talked about setting your QuickBooks file up. We've entered a bunch of transactions. Now comes to like the meat of what QuickBooks is about is the reports. So you're setting all of this up, you're creating it so you can get accurate reports in the end. So we're just going to kind of talk through reports, what you can do, what to look for, different things related. And I'm going to pull up some different reports. Features that aren't turned on or that you don't have with that version. So most of the basic reports, especially your statement of activity and your statement of financial position, which because I had to log out, it changed the names of my report. So you can see now their balance sheet and profit and loss. So I'm going to go back in to our accountant settings and I'm going to change this back. So my sample company resets every time I log off. So probably a lot of the stuff that I did is not going to be on here. So we may have to do a few things too.
I don't know if it matters, but your camera is off.
Oh,
I don't know if they're struggling, if they want to see you. Through Zoom.
thank you.
I'm back.
Can see me from the side.
Gosh, I saw it several times. I was like, oh. But it never clicked. That's what was different. I was like, something's different.
Apparently didn't
Wow.
come back from lunch very well. Okay, so if we look at how do we make sure we have accurate reporting, the biggest thing, and we've kind of talked about bits and pieces along the way, but I'm going to kind of just recap all of those for you. One of the biggest things is your reconciliations. So making sure everything's reconciled to make sure you have your revenue and your expenses recorded. The other thing is reviewing those reconciliations to make sure that any transactions that are still sitting on those reconciliation windows, they need to be out there. They're not duplicates. They don't need to be cleared. That's going to be one of the biggest things to make sure your reports are going to be accurate. When you're looking at accounts receivable and you're looking at your AR aging report, we talked about this also a little bit, but the biggest thing, looking through all of these, do they make sense? Does this look accurate? If there's credits out here, if you have negative balances for somebody, do they really have a credit? asking that question. Do they have a credit? Is this just something that I entered in correctly? Do I need to make an adjustment? Just kind of really looking through this and making sure everything on here you feel is accurate. The same with your accounts payable. Are all the bills that are on my AP aging accurate? Is there any negatives? Are they valid credits? A big thing is if you're, say you're entering, you received a payment on an invoice. Let's go back to accounts receivable. You received a payment on an invoice, but you didn't ever create the invoice. You're going to sit there with a credit. That revenue is not going to be recorded anywhere. So that's going to be a red flag. If we see a credit, we need to look into that. On the AP side, you may have had a bill and you did a bill payment, but then for some reason you deleted the bill and now the bill payment is still sitting out there. It's going to show as a credit also because there was no bill associated with it. So those credits can be triggers that you're missing information or you have duplicate information again. And those are really definitely things you want to look at. Almost on any report, is there a negative number? Why is it negative? Is it a valid negative number? That's going to help just ensure you have accurate reports. One of the other features that got turned off is our class tracking. Because I logged out. I'm going to turn this back on because I want to show you what that looks like. So accurate reporting is making sure when you run reports with that you use classes and location, there's going to be an unspecified column. And you want to make sure that everything, if you are using classes and locations, again, utilizing QuickBooks to its fullest, you want to make sure every transaction has a class or a location. So then those reports are accurate when you do run them. When you come to the report screen, you basically have 3 different report options. So you have your standard reports, which is all the standard reports that QuickBooks provides for you. Your custom reports are any standard report that you've customized and you've saved that customization so that you can run it at a later date. And then you have the management report options. The management reports basically allows you to put together a group of reports in kind of a really nice format that you can then provide to a cover letter. You can be real fancy and add a cover letter, add a table of contents, different things. You can do that all through this management reports option. The other item I want to show you is the favorites. So if you haven't figured this out too, like if you run your budget reports, I don't see our budget versus actual sales. Oh, there it is. So you can click the green button and it's going to put it up here in your favorite section. So you don't have to scroll down and look through any of your reports. So any report that you run on a regular basis, I would recommend favoriting, and then it's right up here, ready for you to run the next time.
I have a question on the budget versus actuals. So I think that's the report that whenever we run it, we can't backdate it. Like if we want to run, like we always run reports for review like the month after. So like we'll soon be doing May's. And so like when our committee meets to go over those, like we'll run the reports, but we can't I don't think we can backdate budget versus actuals to like May 31st. Everything that we've put in up to the day that we print it, it'll show up. So our budget versus actuals is, I mean, it's correct up to as of the day that we print it.
I thought it did it.
Yeah, that's right.
Yeah, because here's your date range here.
Yeah, but the financial report,
That's the only one that we just,
you put it till May. We will be doing, we just had one in April, so we did it for April the 30th. You know, they just want to know what happened that month because we meet every month. You're right, the actuals do it to show you what work I have. If we didn't meet till like May 15th, then it will show till May 15th. It'll show April the 30th, but it'll show April 15th. instead of just the end of the month. Does that make sense?
Either have to remember to run it on the last day of the month, so it's completely accurate, or we have to let the committee know, hey, like, we've kind of trained them at this point, be like, this report is including everything up to today, so. It's
Do
like,
you, when you run the report, do you see this where you can change your date range?
mhm.
And do you have a custom here?
Yeah, we go over to the custom line over here on the right by, say, yeah, right there. Customize it. Well, usually that's where you put with the month. You know,
So, well, if you're using like, say, this month or this month to date, it's gonna pull in those dates automatically for you, but if you use custom, you should be able to put in any dates.
okay.
And it's gonna pull the information as of that date range that you pull.
Okay,
So if you use these standard ones, you can still override it, but yeah, it'll only pull.
okay, we'll check.
Cause I think she clicked year to date.
Yeah,
I think it's what she.
maybe that's.
Yeah,
I'm
year to
just saying
date
you're
would get it to the
Yeah,
15th.
yeah, that's right. I think that's what she
Probably.
had
That's
me
right.
do, cause she said,
Yeah.
oh, just go to year to date and. I go,
Yeah, so you
okay.
could do year to date, which will take you all the
All
way
the way
to,
up to what
Yeah.
I put in that day.
but if you
Yeah.
do custom, you should be able to do any date range that you want, and you don't
Okay.
have to run it on that
Okay.
specific date to get it.
I think one of the things you run into is that our budget is spread out to where, but like, so we'll have, like, we'll split it up evenly through the year, like $200 every month for this line. But that group, that ministry can spend whatever, they just have to stay within, $1,200 a year, whatever it is. I guess it's 24, but, so I think that's what we get if we do the custom, then it looks off because it's only counting the budget as being like $800 instead of $2,400. So it'll say like it's 300% over budget for the year when actually it's kind of right on target, right? Where they're
Yeah.
well within their means.
Yeah, cause they can spend their whole budget in 1 month.
Yeah.
You know, it could be an activity
And
that's.
I think
the
you'll
whole month.
always have that unless you know, like we were talking earlier, the seasonal different
Yeah.
time
Mhm.
periods that you spend more.
Mhm.
But like a ministry, they may have different reasons why they spend more earlier in the year or later in the year. And then you'll always have those explanations, I think.
Yeah, I always have to tell them, well, this is what happened. Okay.
Would it ever, okay, this might be a really stupid idea, but if for us, like, would it be something to consider, just instead of doing it monthly, just being for the year? Because you can do an annual budget as well, right?
Mhm.
So instead of splitting it up by month, we could say for the year.
Yeah.
Would that be something to think about?
You could do
I
that.
guess
yeah.
I
Because you
didn't
could
realize we
really
could
say
do.
over 50% through the year. This is the
Mhm.
full
This is
year.
where we
So
should
This is
be.
how much it's been, this is what's been spent out of that budget. I mean, on that line item.
Why did that make it all?
I don't know, something to talk to Jim.
Yeah, well, it's all right.
Do you guys use the custom reports?
Uh-huh,
Mhm.
we do.
Because I was gonna say, you can customize it and have it saved and you can just go in there.
That's what we do for the,
Usually
but
do.
we have 4 reports we give them,
Mhm.
committee. Anyway, just a thought, when that.
Thanks for helping us talk that through. We needed to be moderated through.
Yeah, so, yeah. One of the other things too is kind of thinking beyond what QuickBooks is just giving you. How can you kind of manipulate it in a way to get the information that you want? Most of the time, you're able to get the information you need from QuickBooks. It's how do you manipulate it in a way that is able to get that?
Yeah.
Okay, so if we go back to the reports list, so kind of like we've already talked about, you can customize any report in QuickBooks. You can customize it in any way that you want. So say if we go to the statement of activity and we want to look at this always month over month, we can just change it here kind of on the front report. And then we can click on the customize and we can add other features here. So we can add, we can change the columns. So we can add other columns to our report. We can filter based on the information that we see. So we can filter by account. I'm not sure why you would want to do that on a statement of activity, but you can do that. You can filter by location by class, and then create just a memorized or custom report based on that information. You can also change the name of the report and change the information that prints on the report. If you don't want anybody to know when you printed it or the date you prepared it, you don't have to include that information on the footer. So you can adjust all of that information in the customize, and then we can hit run report, and it's going to make all of our changes that we listed, and then we can save the customization. So we want to say that I'm running this for Debbie every month. So I'm going to say this is a statement activity for Debbie. This is how she likes to see it. We name it whatever we want to name the report. You can also create a group. So where I see this group used a lot is we may have a group of, I have a client I know that uses this. They created a group called Accountant. And they basically put any reports that they need to run for the accountant, either at year end or for whatever reason throughout the year. They kind of put them in a group. So then they're able to easily go in and see that group of reports. These are the ones that I always print for that accountant. So I'll go ahead and create that accountant group. And then you also have the share with. The share with is you can either, your custom report, you can share with everybody. If you hit all, it's going to share it with all users that have access to the company file and who have access to those reports. Or you can share it with none. If you share it with none, you're the only one that sees that custom report. So if there's reports that you only run and nobody else needs to see, you can keep those on your list, and then they're not on anybody else's report or anybody else's list that they can run. You can also
edit that later, like if you create it just initially just for you to see, but then you find it's beneficial.
Yep. So we'll do none, and then we'll go back in and we can share with all. You can also share your reports with the community, which basically puts them out there for any QuickBooks user to use. But yeah, I'm not sure the reason. I guess if you really spent a lot of time creating a custom one that gave you a lot of information, it may be good to share. But so yeah, we saved this custom report. If we go back in and we go to custom reports, so we only shared it. We didn't share it with anybody. And we can edit it. Maybe. And close it. There we go. So you can come in here and say share it with all.
Gotcha.
I have no other users, so I can't share it. So you can also see this group that I created. So I created this accountant group. If we would create another group, you would have another set here. So say I had reports that I just printed for Debbie, I could create a group that's Debbie, and all of Debbie's reports would be under there too. So just an easy way to kind of group your customized reports if you use that feature a lot. You can create one for your board if you don't use the management reports, but I always do these reports for the board. You could create a board group as well in that group section. So almost every report that is in QuickBooks can be exported to Excel. So you can come up here and this little, I'm not even sure what icon it is, but it has the arrow on it. You can export it to Excel and it will run the report into Excel. So I don't know that I've run across any reports that you can't. Excel. Any changes you make in Excel, of course, don't come back into QuickBooks, but it just allows you to manipulate that data a little bit more if you need to in your Excel file. So if we look at kind of the two biggest reports, if we're, say we don't have a budget, but the two biggest reports that we look at on a regular basis are going to be your statement of financial position and your statement of activity report. Those are going to be the two key ones that we look at. So if we start, I always start with your statement of financial position, or your balance sheet, it's also called, just to look. This is going to be, a lot of times if we make sure the balance sheet is correct, there may be some stuff on the P&L that we need to adjust, or your statement of activity that you need to adjust. But if you have your statement of financial position or balance sheet correct, that's really what you want to focus on. And you want to make sure everything on here ties out. So the goal is to kind of pull this report up. And this report basically shows your assets, your liabilities, and your equity. And this report should always balance. In QuickBooks Online, I don't know that I've ever seen it not balance. In a desktop version, it does get off and it doesn't balance at some point in times, and there's some fixes that you can do. I don't know in my however many years that I've used QuickBooks Online that I've ever not seen it balance in QuickBooks Online. So in my mind, that's a good thing, because then you don't have to worry about how do I fix it, how do I adjust it. But so you shouldn't have to worry about that, but always just something really good to check. So kind of what I want to go over in these two reports is kind of what you're looking for. Like, how do you, again, make sure this information is accurate and that you're providing good reports to whoever's looking at these reports. The biggest thing is just to kind of go through each account. So, okay, look through your checking and savings. Have we reconciled those? Have we looked at those reconciliations? We have, okay, check. We know those balances are good. Accounts receivable. Have we looked at the aging report? Do we know everything on there is accurate? Okay, we're good. We can check that off. We're good with that balance. This is a sample company, so they have inventory. Probably won't have inventory, but if we look at fixed assets, if you have any fixed assets for the company, did you add anything new this year? Do we need to adjust it? Does it need to be here? So just looking at what's in these balances, and by clicking on each number, you can look in and see what creates all the transactions to make sure they are recorded to the right place. Then as we get to the liabilities, again, we looked at our AP aging report already. We've checked everything. We know there's no duplicates. We know there's nothing. We know that's good. We know we've reconciled our credit card. We can now mark this off. We know that's good. If you have any loans, you'll want to make sure you get loan statements from the bank or something to make sure the balances match the agency balance where that loan is held. And if, say, you entered the full payment here and it needs to be broken out into principal and interest, it's easy then to just come in here and click and then break it out between your principal and interest, which will then get your loan to tie. But you want that liability to tie to the bank just so you know that balance is accurate on those reports that you're providing. Other items you may have in here would be like your payroll liabilities. If you're using QuickBooks Online for payroll, you may have payroll liabilities. If there's balances, make sure you know that those are correct and those are accurate and those are still due and payable. Other things you might have, if you do sell any product at all and you have sales tax, you'd want to make sure that sales tax is accurate as well.
Those should clear out on the same schedule that you pay in your the amounts to the agencies.
Excuse me,
Sorry.
I'm sorry.
Oh, you're fine.
No.
The withholding,
Yep.
monthly or quarterly, however, whatever schedule you're on.
Yep. What I like to do is anything that I have payroll liabilities related is I'll click in it and I'll see what the balance was from the previous month and make sure I see a payment for the exact same amount. So we can see here that on 3/11, our balance was $38.40 and we have a payment for $38.40. So that's how you can, there may end up still being a balance here because of stuff that's happened after that point. But as long as we can see that it's washing out, then we know that balance is accurate. Do you have anything about equity you want to talk about?
On the equity, so for nonprofits, they're required to show if there's any restricted net assets. So if the donors have restricted some net assets or net assets without donor restrictions. And so you can set up accounts down there at the bottom. And adjust those to whatever balances you have. So normally, nonprofits will track the amount of donations that are provided that are restricted by the donors and kind of keep that up throughout the year. And so that balance of whatever's still restricted by the donor should agree with that line item that says net assets with donor restriction. And then everything else is without restriction.
Okay. So then if we go on to the statement of activity report, which is also the profit and loss report, what we're looking at here is we're essentially looking to see and make sure everything looks correct here and looks accurate. I like to run a comparative report, and I usually do the previous year with $1 change. And the reason I like to do this is because anything's going to stand out to me that if it's, and I don't have data in here, so it's not going to show a lot, but it's going to tell me if there's a big change from this year at this point in time, this year at this point in time, or this year as there was last year. If there's a big change, I'm going to start looking into it. Did I code it to the wrong place? Is there something that I didn't account for that I need to know about? It just pulls out those maybe possible red flags, again, to make sure your reports are accurate.
Is there an accrual that needs to be made or
Exactly.
anything like that?
Yeah, anything that you might be missing. The other thing I look on here, the biggest thing, I mean, I scan a report almost right away. Are there any negative balances? That is a huge thing. Is there a negative balance, and should it be a negative balance? So if we have discounts up here, of course, that makes sense that it's a negative balance. But if there's any other negative balance, why is it negative? What do we need to look at? What do we need to adjust there? The other biggest thing you want to make sure with a statement of activity, hopefully since you've tied out your balance sheet, there shouldn't be anything else left in the statement of activity, but you want to look and see, is there anything here that should be on my balance sheet that I've recorded in my statement of activity? Kind of some common things that we see is if somebody gets loan proceeds, a lot of times we may see those in a revenue account versus creating a liability account on the statement of financial position report. So if you have a huge increase in revenue, again, this comparative report really kind of pulls that out, then you know that needs to go to your balance sheet or statement of financial position.
Some other things are fixed assets, like if you've expensed the purchase of a car and it should be actually on the balance sheet and depreciated. And then another one might be insurance, like if you pay a whole year upfront and it's going through your statement of activities. But you still have a lot still prepaid for the whole year. You can reclassify that into a prepaid asset, and it'll make your statement of activities look much better, more comparative.
Yep. So what I always do, especially for the fixed asset side, I'll look through a lot of the accounts that typically would have fixed assets, like repairs and maintenance or office supplies or supplies in general. And I'll look through those accounts and see if anything looks like it needs to be moved over to the balance sheet as a fixed asset. And every organization has a capitalization policy, and they kind of determine their threshold. Most of them, would you say nonprofits are the same as for-profits, the 2,500?
Yeah.
So yeah, it's kind of the rule of thumb I use. Any one item that is over $2,500 typically needs to be capitalized. So if we look around this room and say we bought, each of these chairs, and it was, say we bought 25 chairs and they were $100 a piece, we wouldn't have to capitalize that even though it was $2,500 because each individual chair was under that $2,500 requirement. So just kind of looking for those types of items also to be able to move. The other thing that I look at, sometimes I use miscellaneous expense, ask my accountant as kind of a holding area, because maybe when I'm recording it, I don't know what that transaction is for. I will come in here if I see anything in a miscellaneous account, I try to then move it to where it needs to go. Anytime we look at a client's files, we try to leave little to nothing in miscellaneous. So. Oh, they should still see me.
I remember seeing that, but I forgot what it was.
Okay, so those are two of the big reports. If you have budgets, I'm guessing budgets is going to be one of those other reports that you look at and make sure, again, just really, we can come in here and say, hey, QuickBooks, print this report for us, but we also still have to do some of the work to make sure they're accurate. So that's kind of on the reporting side. I think Debbie will
So if you do have loans on there, we want to make sure that we've classified the current portion versus the long-term portion of those notes. And why that's important is if that helps tell what your current ratio is and how liquid the organization is. And if the organization has a loan with a bank, then the bank's going to be looking at those ratios. And so that split is pretty important. The other thing that there's been new accounting standards behind the last couple of years is restricted cash. And so that's cash that either the organization is required to keep in a separate account, sometimes with some of the federal funding agencies, they require that. So you'd want to make sure you set up an account like that. So it shows up in your reports. Restricted cash, sometimes like a HUD agency has to keep that for escrows and other purposes. We already talked about the net assets with and without donor restrictions. So that's in the net asset section. And then on the statement of activities. So normally you like to have all of the operating activity at the top. So when you're formatting that or when you're deciding what your account numbers are, and then anything non-operating kind of comes in at the bottom, and that's usually like interest income, interest expense, gain or loss from sale of fixed assets. I keep kicking you.
I'm sorry. I'll turn this way.
No problem. So anything that's not really part of the organization and the operations or your mission, you kind of want to have it dropped at the bottom so it doesn't interfere with what you're looking at on an ongoing basis. And so that's in your setup. Then the activity. So we talked about the net assets with and without donor restrictions. But on the financial statements themselves, you want to make sure that that's categorized. So like if you have investment income on donor restricted investments or something, that it's showing up accordingly that way. And there's ways to set that up in QuickBooks too. And then also the new standard that's coming out is in-kind income and expenses that are supposed to be recorded on the financial statements now so that organizations can compare apples to apples. And so on QuickBooks, then those would be accounts that we'd want to set up. So examples are like rent. See these bottles right here, the hand sanitizer, those were given to us, the nonprofit chamber. And so we had to set those up on these books as an in-kind donation. And then we have an in-kind expense as well, because, we're using those donations to purchase those. So it flows through properly. But then the reason why you do this, especially with the rent and services, is that if you were to lose that benefit, then you would want that still in your budget. Because you'd have to replace that, especially for space or a person that provides a really valuable service to the organization. So that's why in the new standards, they've kind of required that, but we can do that with the QuickBooks and setting up your accounts.
And then you would want to enter that transaction just as the journal entry. So because there's no cash exchanging hands, you're essentially recording your revenue and your expense on a journal entry to record that transaction.
Yeah, good point. And then the last thing I had was allocation of functional expenses. And so Adam touched on that a little bit, because the functional expenses are not only on your financial statements, but when you fill out your 990 tax return, it's allocating it between general and administrative expenses and then your actual program. And there's ways to set that up, like Vicky went over, in, was it different types of accounts so that you can accumulate those dollars to make it a lot easier. One reason that Adam didn't mention when he went over the 990 is people, especially your donors, are very critical about how your dollars are being spent. So if they're wanting to donate dollars to your organization, they're going to look to see what that percentage is of G&A cost versus program. So if they give you $1, how much of that dollar are you spending it on your salaries versus on your actual mission? And so that allocation of functional expenses is one thing to kind of spend some time on when you're setting up those accounts, just to make sure that they get coded correctly.
And as you can see, a lot of the things that Debbie talked about are related to your setup. So if you're talking about, for example, if we look at the operating versus non-operating income. So we talked about how QuickBooks uses, they basically put everything in alphabetical order based on the type. So all our revenue here is in alphabetical order, and then our expenses are in alphabetical order. When you come down here, you also have this other expenditures and other income. So when we're creating accounts, that just all pulls from the types. So if we're coming in here and we have some non-operating activity that we want to record, we just come into here and we create a new account. This is new. I'm going to change how they do this. So there's a I don't see the other income, so something is funny here. There's usually an other income or other income or other expense type account. And what that does is it then moves it down to the statement of activity into that other area. So if you have some non-operating activity, you can set it up as the other income or the other expense, and it's going to be clear down at the bottom of your statement of activity report. So again, it all kind of, you can see now how it all kind of boils back down into your setup. How do you want it to look on those reports is how you want it to make sure it's set up on your chart of accounts. Okay, sorry. I always say one of the benefits and one of also sometimes the cons of QuickBooks, being on QuickBooks Online, you're always on the latest version. And so sometimes you come in one day and it's, you enter everything one way, and then you come in the next day and they've changed it. So they kind of update on how you look. I know we did a bunch of books for our QuickBooks class, and the plus button used to be over here. And we did the books, they all had the plus sign over here that we did the books on. And then probably a month later, they moved it over here. So all of our books are outdated, so. Okay, let's take just a quick little break here, and then we'll come back and start talking about payroll and then some tips and tricks.
What time should that be to come back?
Let's plan on coming back maybe at 1:45.
1:45.
Yep. Okay.
We're back.
Okay. We are going to start talking about everyone's favorite topic, which is payroll. I like to receive paychecks, but it's not always fun to process payroll. And this is definitely one of those features when I said I'm in a sample company that I don't have a lot of access to. So I try to include as much information in your slides as possible, and I'll talk through those, but there's not a lot that I can show you on the screen just because I am in a sample company. So I included on here, just kind of like with the versions, I included the different payroll options that QuickBooks offers right now. All of the payroll options that they do offer are essentially now full service payroll. I think some people are still kind of grandfathered into where you can still make your own tax deposit payments. You can record those. You can file your own payroll reports. But for the most part, QuickBooks does that for you, which is great. You don't have to worry about the timelines. You don't have to worry about making sure you're timely. One of the biggest things with payroll, though, that I see a lot of people, especially with these automated systems. So if you have a payroll company that does it, or you have QuickBooks that does it for you, they kind of get out of the fact of understanding payroll and understanding what goes into payroll. And that kind of sometimes can hurt, because then, QuickBooks is processing it for you. You think everything's fine. And then you don't know there's an issue till there's a problem. and then you have to resolve it then. And so the biggest thing with payroll is to make sure everything is set up correctly. So making sure everything's set up taxability wise, make sure you're set up your frequency on your payroll taxes correctly, so they're getting paid timely. Setup is the key with payroll. So kind of some key things to maybe think about as far as payroll is in helping make sure things are set up correctly is one, the first one is, am I paying this individual correctly? Is this employee or is this individual an employee or is it contract labor? And so kind of understanding those contract labor rules and knowing whether they meet those contract labor rules or whether they need to be an employee. There's some really good sites out there that kind of break those down. There's a lot of questions that you can ask on kind of some tests you can actually do to see if somebody's a contract laborer. But kind of so the 3 keys that I look at first and foremost is, do you tell that person when and where to be? Because you're in my mind, or at that point in time, then they're essentially an employee because you're basically controlling what they're doing and when they need to do it. The other thing is, do you provide their equipment? Do you provide the computer? Do you provide the desk? Do you provide the office that they work in? That's another kind of one of the test rules that we look at. And then the other one is, do they work for somebody else? So if somebody comes in and they maybe do the cleaning in your office and they only do it for you, that may be an instance where they become an employee. However, if they have a cleaning business on the side and they clean for other offices, that would fall under the contract labor rules. So there's a lot more tests, but those are kind of the 3 that I look at kind of to start with to make sure I'm classifying that individual correctly, employee or contract labor. The other thing is, what documents do you need? So if somebody is going to be an employee, we're going to kind of talk about, since we're in Kansas, we're going to talk about this from a Kansas standpoint. Each state is different. I wish they were all the same, but each state has different forms, different requirements. So everything we're going to talk about is for the state of Kansas. So when you have a new employee that starts, you want to make sure you're getting 3 documents from them. You're getting a W-4, which is the federal, which dictates the federal withholding. You're getting a K-4, which dictates the Kansas withholding that you're going to be taking or withdrawing from your employee's paycheck, and then an I-9 form. And you want to make sure you have all 3 of those documents from those employees, and then you set up that information based on those documents in your whatever payroll system you are using. The other thing to think about is, are the amounts or is what I'm paying the individual taxable or not? So is it a wage? Is it bonus? Is it a reimbursement? Are those taxable items? So just really kind of understanding what determines whether it's taxable. Wages and bonus, of course, would be taxable items, but reimbursement, in some instances, it could be just you're getting documentation, and so you're just reimbursing that individual. It wouldn't be taxable. There are other instances where reimbursements will need to be taxable. So just kind of understanding when it's taxable, when it's not taxable. The other item to think about is your deductions and whether or not your deductions are pre-tax or after tax. So, and then also what taxes are those items pre-tax for? So like if we look at, for a couple of examples, if you have a 401k, it's only pre-tax by federal and state taxes. Whereas if you have a Section 125 insurance plan, it's pre-tax by all taxes. So just really kind of understanding how that deduction should be set up in your system so it's calculating the taxes correctly for that individual or that employee. The other thing to really make sure of is what the frequency is that you need to pay in your payroll taxes. So then that way you can get it set up in QuickBooks correctly or whatever payroll system you're using correctly. Those frequencies are dictated by the agency. And it usually is dictated by your liability, your annual liability that you pay in for that tax. So if you get set up, say for Kansas withholding, and you're only, for whatever reason, they set you up as quarterly, but then as you move through, your liability really increases, they may switch you to monthly instead of quarterly. But the state dictates on when that frequency changes on both the federal agency and Kansas agency. The other thing to really make sure you understand is what forms you're required to file and when. So even though QuickBooks is doing them for you, it's a good idea that you know when those need to be done, just so you know that they're being done properly and they're being done timely. Because ultimately QuickBooks may be doing it for you, but ultimately the responsibility is on you to make sure those forms are getting filed. So understanding them and knowing when is always a good idea. So if we kind of talk through the most common payroll, we're going to talk about the payroll taxes first, and then we'll talk about the forms that are associated with those. So if we look at the 941 taxes, which are your federal taxes, this is made up of, let's see, 5 different taxes. It's made up of your federal withholding, and it's made up of your Social Security, the amount that's withheld from your employee, and then also the amount that's matched from your employer. And then the same with the Medicare taxes, withheld and matched. So that's all when you pay, when anybody says 941 taxes, that is what is associated with those 941 taxes. Kansas withholding tax is only employee, so you withhold it from your employee. Local taxes, I don't even know if there's any in Kansas.
Just in Kansas City, which is
Yeah,
basically Missouri.
I think it's the Missouri side. So I don't know that there's any others in Kansas, but if you do deal with other states, you have remote workers, you have something else, you want to look into see if they have local taxes, because it is common in other states, other areas. The federal unemployment taxes, those are employer paid, and they're paid on the first 7,000 of taxable wages. So after that, you don't pay any federal unemployment tax, but you still have to report, here's the wages, and then here's the excess. Then you have Kansas unemployment taxes. Those are also employer paid. And those are on the first $14,000 of taxable wages. And
I think for nonprofits,
it could
up
be
to 2
different.
people, you don't owe, you don't pay unemployment
Yeah.
tax, but then after that.
So there are different requirements too. There are basically, where you're exempt from paying those taxes. Those are the most common payroll taxes. We're going to talk about the most common payroll forms now. So here, there's really 4 forms that you file for payroll. The first one is your federal 941 tax form. And this is a quarterly form. It's due each quarter, and it's due the last day of the month following the end of the quarter. So if we're doing first quarter, it would be due April 30th is when it would be due. What the 941 form does, if your liability, your tax liability is $2,500 or less, you can pay that tax with the form. You don't have to pay it on an ongoing basis. If it's over $2,500, you have to pay it in based on, again, that frequency that the federal agency established. And then what the 941 form does is it reconciles your liability. So it calculates how much you should have withheld and should have paid with the amount of the payments that you made. So it just reconciles it out, and hopefully you have a zero balance due because you've paid everything in. And then that's essentially what the 941 form does, is it just reconciles everything out for the federal. For Kansas withholding, again, you pay in your taxes based on the frequency. However, they do not have an actual form that needs to be filled out except for at year end. And that form is a KW3. Usually it's an E form because it needs to be done online. I don't think you can file by paper any longer. And what this form does is it basically, whatever you've withheld and you've reported on your W-3 that you withheld for Kansas on your W-2s, the total on your W-3, you enter into this form, and then you record all of the payments you made. So you're reconciling the payments with the amount of Kansas that you have withheld and shown on your W-2s. The federal unemployment form, so both of these unemployments, as long as you're eligible and you meet the requirements, the form 940, if your liability for the year is under $500, you can just pay it with your form 940, which is an annual. If your liability is over 500, you need to make a payment each quarter for that tax. And then what the 940 does is very similar to the 941 form. It basically reconciles your liability with the payments that you've made to ensure that you've paid everything in and everything's done correctly. Your Kansas unemployment, the form is the KCNS 100 form. This form is due quarterly, and that's the only option for this form. And it essentially, you pay in with this form each quarter. So it will calculate how much Kansas unemployment you need to pay. You may have your taxable wages, and then you have, if they've hit and they're over the 14,000, they will record excess and you won't pay any more in. So typically your first quarter, your first 2 quarters, you pay in a lot more. As you get towards the end of the quarter, as long as you have the same employees, you may owe 0 tax in, but you at least have to file the form indicating what your taxable wages were and that they have hit the excess. For your Kansas unemployment, each year, typically is in November-ish, October, November, they will send you a new rate for that year. So you want to make sure you get that in right from the very start before you start the new year. So it's your new unemployment rate for that year. Your rate is based on a few different criteria. One, if you had anybody file claims under your unemployment account, a lot of times your rate will go up the next year, so you can replenish that balance. Another reason would be just if the agency makes changes on how much they want in reserve or how much they want in that account, they may adjust your rate up or down, depending on what changes the agency makes. In QuickBooks, if you do have payroll turned on, everything will be kind of under this payroll option. You can have, again, you can pay your individuals that are 1099s in here. You can use the contractor option to pay those, or you can do the employees. And again, this will walk through payroll and pay them through payroll. QuickBooks Online, their payroll is great. As long as you get everything set up correctly. If something is set up incorrectly or something doesn't get caught and you're having to adjust forms, adjust anything, you're kind of at the mercy of QuickBooks support and kind of who you get with QuickBooks support. And so sometimes that's good, sometimes that's bad. I have had some not so good experiences, so it works. I tell everybody it works great. Sometimes I'm not a fan of the QuickBooks payroll. It just, online, you lose the flexibility that you had with the desktop.
Telling you what they filed or anything? I mean, you know what I'm saying? I mean, it's already been set up and I'm just going in and saying, yeah, I'll pay these people. And I don't know if they're doing the right forms or not. I mean.
We usually get a email every time we get paid, every payroll.
Yeah, they say, okay.
There's that says we paid these taxes. And then also like it'll show up like when you log in, sometimes it'll be like, it'll say, we've done this tax thing or this needs your attention for this tax form. I'll show you.
Okay.
Yeah, so when you first come in on the home screen, yes, it'll kind of tell you, hey, you need to go in and do this, or hey, this is an issue, you need to address it. There will be like little boxes up here that it will tell you.
Okay.
Also, if you go and if you have payroll set up under this taxes, you will have a payroll tax option.
Oh,
That's where you can go in and see the tax history, what payments have been made, what
Okay.
reports have been filed. And they should have archived reports of the reports that they have filed on your behalf. That should all be sitting out in the payroll taxes here.
okay. Great. Thank you.
Yep. So again, really kind of key with payroll is just a lot of even payroll systems that you use. You just go in and you enter hours and maybe that's all you do with payroll. It still would be beneficial to really understand it, to know what's going on, to know if anything needs to be corrected. Because if you're kind of at the mercy of somebody else telling you, it could be at a point where you're getting a notice, you're getting fees and penalties that you have to pay. So just really understanding it is a good practice. And I think Debbie's going to talk a little bit about some things that you want to think about related to nonprofits and payroll.
Yeah, so I think we talked about a couple of these things, making sure on a monthly basis, even though we're running payroll, that to get your monthly financial statements or year end accurate, make sure that we're accruing, the salaries and wages at the end of the month or end of the year. And then compensated absences. So if you pay vacation, if somebody leaves, you want to make sure that you've got a liability out there for that on the books. And that's a journal entry. And both of those were journal entries. Talking again about the allocation of functional expenses between program G&A and fundraising, that's allocating the salaries from payroll into those buckets, make sure that those are set up correctly. Fundraising is a criteria that's required to be on the 990 tax return. So if you've got a fundraising person on staff, then make sure that those salaries get coded to that.
And in the setup of payroll, you can choose, so you can set up multiple accounts for payroll. And so you can choose, say, if you have an item, you can have that go to one payroll account, or I believe even individuals you can have coded to a specific expense account to code those wages. So
Okay,
you could easily use QuickBooks on the setup side to be able to record those and have it record as you process payroll instead of having to adjust.
that just makes the financial statements and the tax return that much easier to do from QuickBooks. The ERTC is the employee retention tax credit that's available out there. We've been filing quite a few of those for nonprofits now. And so that might be something your organization wants to look into, and all it entails is comparing quarters from 2019 to 2020 and 2021. And you can get up to $10,000 of employee credit if there is a significant drop in revenue receipts for a specific quarter when you're comparing it back to the same quarter in 19. It's just some organizations have gotten quite a bit of money back, and it was just something that we wanted to make sure everybody kind of knew about.
What's that called again?
The employee retention tax credit. And you get to back out the PPP loan funds, but the other COVID-19 funds, you have to leave in there, which might keep you from having that drop in a specific quarter, but it might be worth looking at. And then using the payroll reports out of QuickBooks to help monitor the compensation in your organization, by comparing or combining that with compensation studies that are out there to make sure people are paid, especially in today's environment, post-COVID and post the resignation era or whatever, making sure that you're paying enough for people that you need to hire into your organizations, because it's really hard to find good people now. And so that's one thing that you can use these payroll reports for. Executive compensation out there, there's what's called a private environment. If you pay your executives too much money. And so, as part of your payroll monitoring, that's one thing to look at to make sure that you're comparing to other organizations and not paying your high up people too much. And then also using the payroll for budgeting, And then one big thing is utilizing the trial balance. And we talked a little bit about it, but making sure that your payroll taxes are being paid and paid timely, and that those accounts are zeroing out. We just had recently a client that's a local government that ended up, they owed $150,000 in past payroll taxes that somehow didn't get submitted. And so they had to go back and reconstruct all those payroll reports and everything. But make sure that as part of the payroll module that's kind of watched. And then the 403B compliance and making sure, because Vicki, you mentioned making sure that all those different buckets are set up right and taxed appropriately, the different types of pay. But that eventually feeds into the 403B plan, and that, the compliance part of that. So,
I've seen probably more often than I would like that a lot of people come into us, the clients come into us that they have no idea if payroll taxes have been paid, their liabilities have a crazy balance. They have no idea what they're looking at, why they're looking at it, or what that balance even entails. They just, maybe they have a payroll company that's doing it for them, or maybe they say QuickBooks is doing it for them. The biggest thing, if you can take away from this, is even though somebody may be doing it for you, even though somebody may be processing it for you, you are essentially responsible for that. So just making sure that you know, hey, this looks right, these are clearing out, you know what that balance is, you know that balance is accurate, is going to just save you in the long run. Okay, any questions on payroll? Okay, this is just kind of the end of kind of the QuickBooks side. I just like to show a bunch of tips and tricks that I've learned along the way. Hopefully time savers for you, hopefully just ways that you can easily kind of look through. So I'll just kind of walk through some of those with you. So one of the big things that I use all the time is multiple windows. I have 3 monitors at my office. And so if I'm looking at a QuickBooks file, a lot of times I may have the balance sheet on one screen, and then I have another screen up where I can start making changes. So to easily do that, I just kind of drag and drop any other item. So I just drag and drop the reports up here. So it's going to create a new tab. You can have as many tabs open as you want. And trust me, I haven't hit a limit yet, and I have a bunch of them open all the time. So it just is a really quick, easy way. And then if you have multiple monitors, you can pull one over to the other screen and then be able to kind of work in QuickBooks. What happens on one screen refreshes on the next screen. So just easy to kind of walk through and manipulate and kind of use QuickBooks in a good way, an easy way. Another, so we talked a little bit about how there's multiple ways to do several things in QuickBooks. We've gone to this account and settings quite a bit today. A quick, easy way to get to that is if you're on your home screen, you can just click on your company name and it's going to take you right to your account and settings. So then that way you can come in here. Here was the advanced tab where we're turning things on and off. So just by clicking on the name is a quick and easy way to get to that account and settings screen. Another trick is, so if you do Control Alt and question mark, it's going to bring up this additional information screen. And if you ever call into QuickBooks support, they may ask for your company ID. If you do this Control Alt question mark, it's going to tell you what your company ID is, so you can provide it to them, and then they're able to help you with whatever issue that you have. You also have, you can see what view you are in. I use the accountant view quite a bit. There is another view, I believe it's called a business view. I don't find it very useful, but if yours doesn't seem to be set up this way, I'll show you where that business, or where you can get to this accountant view, which is set up then similar to what we've been walking through today. The other thing that the screen shows you is shortcuts. So if any of you are desktop users, there was quick keys that you could use to get around in the desktop version pretty quickly. These are the same kind of premise, that you can use these short keys to be able to get to certain areas in QuickBooks and get to them pretty easily. That was the Control Alt question mark. So if you want to change the view, if you go to the gear icon, you can see down here, and this is where you actually switch the views that you're looking at. So if you switch to the business view, this seems to be the one, if you are new to QuickBooks, that QuickBooks is putting you in automatically. Again, I just find it hard to maneuver around in because you kind of click and then it opens up other options. I kind of like just seeing those options available right on the side. So if you are in a funky view that doesn't look kind of like what we've talked about today, I would recommend checking this to make sure you're on the accountant view. And then it's very similar to what we've been using today. And I find this just a little bit easier to navigate and work through. The other, another trick I wanted to show you is, so let's go to our vendors. And let's go to Books by Bessie. And let's say that we coded these books by Bessie to legal and professional fees, but we realized that's just office expenses. If you come over here and you check any transaction that's going to an expense account and you go to batch actions, you can hit categorize selected. And we can code office expenses. And then we can hit apply and it moved all of those expenses. And kind of one fell swoop. So you can do that on the customer side, you can do it on the expense side, but it's really quick and easy. Then you're not having to go into each individual transaction and change it. If you know they're all need to go to that one account and need to be switched. Another option that I use quite a bit is if we go, say we're going to go into checks. You always have this clock icon up here. If you click on that clock icon, it's going to show you any recent transactions that you've entered. So if you want to say you're like, I know I just entered a check and I need to go in and change it, or I've entered a journal entry and I need to go in and change it, you can just click the clock, click on the transaction you need, and then change it how you need to. So just a quick, easy way to get into past transactions. It only shows, I'm not sure what criteria it does, but it only shows a few here, but you can click view more and it's going to show you a lot more.
So where'd you click for view more?
So if we go back into checks,
I was running.
you're good. There's a view more.
Oh, okay,
At the
down to
bottom.
that, okay.
Yep. We kind of have talked about the more option, but on each transaction entry screen, you typically have a more option here. This one only gives, let's bring one in. So the more gives you several options. I use this a lot, like on a journal entry. If I'm going to I'm using the same accounts, but I want to change the amounts, I can click more and copy. It's going to copy that journal entry. I change the date, just change my amounts, and then I can save that
Can you do
transaction.
that so we can see
Sure. Do you want me to do it here or through a journal entry?
how a journal entry?
Okay. So if we go to the journal entry, we'll pull one up.
I've used that one to cancel checks, void checks.
Yeah, I've done that.
The more.
Copy, yeah.
Yep, so if you hit copy, it basically tells you this is a copy. So it keeps everything as is. Then I just come in here and say, okay, we entered this
Change
for,
the date.
yeah, we entered it for April. Now we're going to change this and we're going to enter it for May. And then you can just change the amount. And then save your entry.
Awesome.
Oh, yeah.
Yeah, I love that.
Especially in the months, you know, we do
Yeah.
those journal entries.
So you also have the option under more that you can see that transaction journal that we talked about. So if there's kind of, this is to me the most useful under the invoices, so you can see what any changes to that transaction throughout its life of being recorded into QuickBooks. May not let me because I'm the only user. The other, let's go to a journal entry. The other option kind of down at the bottom of your toolbar here is make recurring. So we did copy and that allowed us to create that journal entry. We can also make this recurring journal entry as long as you have the right version. Or unschedule it. And then basically all this information we can say save template. And then again, I use this a lot when I'm entering payroll journal entries for clients. So if I come up here to the gear icon and go to recurring transactions, those are listed here. And then I can just hit edit on the notes payable when I create it. I can say use, I can change my date to what I need it to be, and then I can change my amounts. So it leaves, what's nice is then you don't have to add all of the accounts again and recreate your journal entry entirely. You can just have a recurring transaction related to it. So we talked a little bit earlier about you can, when you're looking through your chart of accounts and, making sure that if you have, say, an account that could ultimately be one account and we merge those two accounts, you can also do the same thing with customers or vendors. So sometimes things get created and maybe they were misspelled. And so somebody doesn't realize that it's the same vendor. You can merge vendors together or merge customers together, and all the transactions that were under the incorrect one are going to now be under the correct one. And so then that way it's, again, you're not having to move each individual transaction to the right customer. You can just do it in one fell swoop, and then you get rid of the misspelled one. Same thing though, if you do this, can't be undone. So let's say for whatever reason, Bill's Windsurf Shop and Cool Cars are the same thing. I just come in here and I copy Cool Cars. And then we go in here to Bill's Windsurf Shop, and we're going to just paste it, and then we're going to save. And it's going to say, hey, this name is already being used. Do you want to merge the two? Yes. So now if we go back and look, Bill's Surf Shop is no longer here, but Cool Cars is. And so any of those transactions are now under.
That's nice.
Yeah. So when you are, if you decide, hey, you know what, I really, after our class today, there's a lot of kind of cleanup you need to do or different things you need to do. Merging is a great way to do that. The key is that I always tell everybody, you do it, you can't undo it. You're manually undoing it. So it's a great feature, but that's one of the drawbacks. Another kind of quick trick that I use all the time is I use the search option a lot. I typically don't just type in here. I go to this advanced search. And the one that I use probably more than anything is I use this amount, line, or total when I'm searching for an amount. And the reason I use that one is say we're going to search for $50. If there is, so we can see here, it's bringing up an amount $477.50. The reason it's bringing up this transaction, if we look at it, one line on that transaction is going to be for $50. So if you use the amount, line, or total, it's going to bring up every transaction, every line that is essentially $50. So to me, that's a great way. I like this better because I could be off $50 somewhere. And if I just do $50 the amount, I'm going to see only transactions that match that, but it really could be a line of a transaction that I'm off. And so by searching for that, it's just easier to make sure I'm pulling up everything and being able to look at everything that I need to. I put the same slide in twice. I'm just noticing. We talked about this a little bit too. There is a gear icon on almost kind of every screen here that will give you additional options. So we've talked about this gear icon, a lot of settings here. On each screen, there's this gear icon. So we can change the columns that we see here. To say we don't really need to see the contact, we can remove that. And now it's going to be in a format that makes more sense to us. So yeah, if we look at vendors, we're going to have the same thing. There's a gear icon. You can see what columns you see, how many rows you see. You can include inactive, not include inactive. So this gear icon, settings here, and then individual settings per screen that you're showing in QuickBooks. Another trick that I use a lot, you can do this really on any transaction also. So if we come in here, you can add right within the cell. So if you have a bunch of items that you're wanting to add together, you can just start typing and it'll total it for you in the cell instead of having to do that outside of QuickBooks, say on a calculator. You can do that right within QuickBooks, and that's anywhere. So if you're entering a check, if you're entering a bill, you can just start typing and it's going to add that or do whatever kind of function you need to do. No, it was in desktop too.
It was?
A lot of people don't know that.
I didn't know that.
Yeah. The other thing, the final thing, I kind of wanted to mention is we've talked about in certain areas, there's multiple ways in QuickBooks that you can get to every transaction. So it's just kind of finding your rhythm. So I may have talked about a way today and you may have another way that you like to do it. Either way is fine as long as you're kind of getting to that same point. But kind of a few things that I wanted to show you are kind of like these action columns is really where you're going to find. So we may be able to do, we talked about this, create a bill up here, or we can easily do it directly from the vendor. So just looking at any screen and seeing, is there an action column? Can I do it directly from the screen versus having to go to another one? Another option is like reconciliation. So if we're looking at the register for a checking account, instead of going down here to reconcile, once we're in the account, we can just hit reconcile and get right to the reconciliation window. So it's just kind of, you'll find your groove, but there are multiple ways to do several things in QuickBooks. And they have kind of changed how they're doing online as well. They're moving a little bit more towards the desktop where I don't know if anybody used the desktop, but you had a home screen and you could click like, here, I'm going to enter a bill just by clicking on a link. Here, I'm going to enter an invoice. That's kind of what they're starting to do here in the online version also. So you can add products and services, create estimates, send an invoice. You can start clicking on these and it's going to take you directly to that screen. I've noticed they keep adding more and more to this screen. So I think they're trying to get it similar to the desktop version. I think they feel people like this. So just keep watching that. If that works easier for you to just click a link, you can get right to that transaction. Those are just kind of some tips and tricks that I've picked up along the way that have kind of helped me maneuver and navigate in the file. That kind of ends us at the QuickBooks side of things. I think Debbie's going to talk about some nonprofits and the industry trends. So we have time for questions at the end too, but if anybody has questions now related to QuickBooks, I'm happy to answer any of those. Okay. Yeah, I can flip to that.
We have a little PowerPoint, and this is like 10 minutes, so it's not very long. But it's just something that kind of goes along with probably budgeting and the nonprofit industry in general. We have an alliance with BDO, which is a national CPA firm, and they presented some of this information I thought was pretty interesting that you can take back and talk within your organizations. But
I don't get into PowerPoints. Do you know how to make this a slideshow? There we go. There we go.
and now I think you have to unshare
What do
or
I do? No, I gotta put it in a slideshow again. There you go.
there you go.
Okay.
Okay.
Awesome.
All right, so they've kind of looked back and they did this big survey across the nation on nonprofits. And so these slides are kind of a result of the survey. So as a result of COVID-19, they were kind of looking back to see what impacted the nonprofit community. And 36% of organizations experienced increased demand on their services and some of their mission that they provide to the communities. 54% said they canceled fundraising events. To me, it seems like it was higher than that because a lot of our clients, you know, they didn't have in-person events. It was really hard to do it online. They tried, but it wasn't real successful. And then 45% said they experienced decreased or revenue or funding. And so as a result of just their ordinary funding, a lot of them relied on the COVID monies and PPP funds and that sort of thing. But so the takeaway, you know, just shows how critical it is for nonprofits to balance a nonprofit that's supposed to be head with the business mindset. You know, a lot of people in nonprofits are so structured with giving and funding that sometimes they don't think about, you know, keeping a business running. And so we're hoping that what we talked about in QuickBooks today will help nonprofits do that a little better. So nonprofits need to stay financially healthy. And some of the tools that we gave you today hopefully will help you get there, especially with the budgeting function. And so the state of the industry today, you know, a lot of the nonprofits were able to turn the crisis into an opportunity. And we've seen that even with the clients that we have. So 60% accelerated advancements in technology. You could see that with people having to work from home and that type of thing, which creates struggles in using software like QuickBooks, and it's, you know, trying to figure out how to get that technology to do things from home. Cybersecurity issues and all of those things became an issue. They also, let's see, 43% had new services or program offerings out of the pandemic, which is a good thing. Experienced faster decision-making because, you know, one day we were operating, the next day everything closed down. It was really scary, but I think it improved a lot of nonprofits during that period. 43% again experienced greater awareness of their mission. So they could really see what an impact their mission does have on the local communities. 39% surveyed saw new partnership opportunities. So here at the nonprofit chamber, that was one thing that we were looking at. You know, how can we connect all the different nonprofits together? How can you combine synergies to meet the needs out there? 33% saw improvements in the workforce culture and unity in those that were working. And then 31% surveyed experienced increased donations eventually. Eating out and spending a lot of money, so they decided to money into their communities through the nonprofits. And so, you know, our takeaway on that is if we all could just reflect on the pivots that we had to make during the pandemic, then that will make better organizations overall. So we talked a little bit about the Great Resignation and trying to attract people back to the workplace. That's been a struggle. So 47% of the organizations reported decreased morale as a result of the COVID-19. So even though that you had increased unity, you still have this decrease in morale just because of all the turnover, those sort of things. Employee retention, 37% perceive that staff retention and employee morale is one of the biggest challenges they're facing today, not only in the nonprofit industry, but I think it's across the board. Everybody's trying to figure it out. 26% noted that staffing retention and recruitment are their highest priority. I know it's one of our highest priorities in our firm even. So it's like, at one point it's like, are people going to come back to work, or, you know, how's this going to work? So, so it's clear that two-way communication and employee engagement are key. You know, maybe that doesn't have a whole lot to do with the QuickBooks, but if we can get better at the QuickBooks and accounting function, we can spend more time on, you know, communicating within our organizations. Industry trends, so digital transformation and accelerated investments in technology, that goes along with, you know, kind of increasing our footprint in technology, either on the bookkeeping side or just IT in general, because of all the cybersecurity concerns, which is at the bottom there. There's been increased hits on our systems a lot of it brought about during COVID, but a lot of it has been with the conflict over in Russia. And that's been increased. We have, I don't know how many clients we've had that have been getting hit. And especially on nonprofits. I think we do have a slide here, but just trying to really teach, nonprofits, because they do get hit through payroll. They get hit through donations, people could donate online. And so we've been seeing an increase in that being hacked, false emails asking for donations. But for some reason, the nonprofits, I think because they do have a wide reach into the community, they're getting hit pretty heavy. So that's a concern when setting up some of the online, transfers with the banks and all that, just making sure that you're being aware of that. Make sure that you have cybersecurity insurance on your insurance bundles, those types of things. So some nonprofit organizations experienced an influx in support, whether from new donors and the federal government. So they're trying to continue optimizing the funding. I know here at the nonprofit, we sent out emails to nonprofits talking about the county was going to provide some additional funding. And so we had to fill out some of these surveys and stuff. Well, then the county decided not to pass that money out and they kept it. And so that was really frustrating. So just trying to identify different areas within the government that this funding is going to be coming available, because it is going to continue a little bit, and just keeping our eyes open as to what is available. The ERT, the Employee Retention Credit, is one that's still going to be available through 2023 or 2024. You have to go back and claim those dollars. So you have a little bit of time, but those are funds that are available. So we did not talk a little bit about this in the QuickBooks module, but in the budgeting and in the statement of financial position, the healthy part, we did talk about our current ratio and the working capital portion. But on the net assets at the bottom of your statement of financial position, that's how you can tell, how much reserve you have in the organization. And so kind of as a rule, nonprofits locally kind of have averaged around a 3-month reserve, which means you have enough assets available that are liquid to help run the organization for 3 months worth of operating expenses. And so the goal was always 6 months. And so that, that gives you a little bit of breathing room, unless in case you hit a valley or something that would keep you from, like you didn't receive funds for a month or so. So through this survey though, they said that 38% had more than 12 months reserve, which is crazy. The only thing I can think of is that these organizations must have gotten PPP funding that kind of, not really that it falsely gave this reserve because they ended up spending it, but it temporarily provided a longer reserve maybe. So, with the increased donations as a result, and then the COVID-19 relief funding, we're hoping that boosts the nonprofits reserve so that we can build back a little bit more healthy. But the QuickBooks module should be able to help you monitor that. And that's something you can communicate to your boards so that they'll be appreciative of that, because that's one thing that they do look at. And that liquidity in a crisis is imperative, just as everybody just, experienced that. If you did hit the pandemic and you weren't real healthy, then you had a lot tougher time than those that were. And so this is just a little pie chart that shows how many organizations received the PPP funding versus the higher education emergency relief funds, which was part of the COVID funding. the provider relief fund, and the disaster relief grants through FEMA. And then we also have the EIDL loans, which we talked a little bit about, that several nonprofits received. Other, which is the employee retention tax credits. And then there's just a small sliver that did not rely on any COVID-19 funds. You can see the wide impact that the COVID-19 funding had on nonprofits. And then with that COVID-19, I didn't mention, but some organizations might be subject to the Single Audit Act now, which is a pretty in-depth audit, which I don't think the federal government really thought ahead when they did that. And so now we're reaping the benefits or the consequences of that. And so just as a FYI, that's additional compliance that has to be kept, which, QuickBooks, there's a way to kind of keep those codings and allocations in that system as well to meet the requirements of those type of audits. So
Yeah, I think for a lot of the COVID relief money in the PPP, at least with our clients, we tried to keep all of that coded separately. So then it was easy to pull out, and it was easy to then however it had to flow, if it flowed through audit purposes, or if it flowed through for tax purposes, or if it flowed through for, building on other funds that were out there. We tried to code everything separate so it stood out, and then we were able to account for it how we needed to. So if you still are getting any of those or still have any of those, just making sure it's coded separately really helps the process.
So like with the provider relief funds, you have to go into their module and you have to report that through electronically. And so if you have your account set up correctly, this is another reason to do that. You can pull those dollars, those amounts out, and then easily upload it into their portal system.
Mm-hmm. And on payroll, a lot of those, like if anybody paid out the COVID credits, that happened for payroll.
Mm-hmm.
So thinking about this through when we talked about payroll, I don't know that there's anything coming down the pipeline as far as any other relief, but always thinking about, I probably need to set that up as a separate item that I'm paying out to those individuals, because it's probably affecting something else, or I need to be able to keep that separate. So whether you set up a wage account in your chart of accounts, or whether you create a new payroll item that you're paying out on your payroll system, just some way to capture that so it stands out and you can easily pull it to the reports that you need.
That's all we had in that quick little summary.
And of course, feel free to ask any questions and whatnot. I do just want to go ahead and launch. There's a Zoom poll. I think there's only a couple people on Zoom still. I think Carrie stepped out earlier. And then obviously you guys can't complete the Zoom poll here. So I'll probably just go ahead and email you a poll. Feel free to complete it. Just some basic questions. Shouldn't take like 2 minutes probably, on like how satisfied you were with the experience, any comments like that. And watch that poll.
It'd be great to hear any additional topics that we can.
And let me just make sure I get all of you guys' names so I know who all the email out to.
Susan White, but I think I've already received mine. It asked what we thought about.
Yeah.
What we're going to think about today.
Yeah, it might have been in the thing. I might just send it out again to when if you want the responses. What was it?
Jill Olive,
Jill Olive. Okay.
Rachel Blevins.
Rachel what? Sorry?
Blevins.
Blevins. Okay. Second.
I do want to say we are going to be doing a QuickBooks 201 class. I believe it's in August.
Yeah, I'll have to double check, but
Yeah.
it's on there. So
It'll be posted, but it'll take a little bit deeper look into some of these areas of QuickBooks, and maybe how to do more entries, how to do some more cleanup, how to do some different things within QuickBooks on a deeper level. So as we've gone through this class, if there's something you want to look at it in a deeper look and you're interested in coming back to that class, just let us know. We'd like to include it and like to make sure we're getting the information out there that is useful and helpful to everyone.
Thank you, ladies.
Yeah, thank you so much for an excellent presentation.
Yes.
Thanks for spending a nice rainy day.